Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on CPI Morning. Joining us in studio is our senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, all. Good morning, chat.
And joining us on the big screen is our senior market strategist, looking real sharp today. I like the glasses with the shirt. He's looking real good. Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shai. The rain is gone at least for a day, which makes it another glorious day on the island.
Yeah, not here, though. It rains every day. Every day, Shai. Has it missed a day? And I mean, I haven't been here
all
a ton,
summer, no.
No, it doesn't miss a day.
Not a day.
Southwest Florida, it rains every single day, 7 days a week.
Crazy.
And then we get into the beauty of our winter. So anyway, good morning, chat. Hope everyone's doing well. We've got Engineer Bear, My Serona, Grotti T Trading, Cooper, Reginald York, Witt, Brad, a lot of people in there. The Happy Crab, Dr. Serena, Tom V, Rocky, Lee B. We've got Adam. We've got the poll I just saw. Should I vote bullish or bearish today? Bullish for sure. Why would you vote bearish for anything anymore? It doesn't make sense. We've got Infinity Works, Kylor, JD Florida Man, Larry Pumpkin, Thomas Millett, and Jacob Wally. Wow, a lot of you in here early this morning for CPI. Let's go to that kind of right away, Shai. What's a preview for today's CPI?
So for CPI, we have CPI and then core CPI, which core CPI is the Fed's preferred metric that does not include food and energy, which are highly volatile. So
why would they?
Right. Only stuff you need, right? We're going to skip that part. So we have expectation is 0.2%. Prior was 0.3%, and that's for CPI month over month. Year over year is supposed to tick higher at 2.8% is the expectation. Last time was 2.7, and then for core CPI, we have swapped numbers. We have 0.3%, and prior was 0.2%. So they're expecting a little bit to tick higher on core CPI, and for the year over year, 3.0% to versus 2.9% prior. So overall, looking like they expect core to be a little bit higher than than CPI.
Yeah. Unless this is a banger of a number this morning, I don't expect a lot to happen, honestly. I mean, maybe in the bond market gets a little shaken up a little bit. We go to the tape overnight. S&P is completely flat. Exactly flat.
It's exactly
zero.
flat.
NASDAQ's up 10. We got Russell up 5.5. We've got the Dow up 11 points. And we've got, I mean, it's pretty flat out there. Natural gas down 1.5% almost. Heating oils down 1.25%. Crude down 0.75%, down 44 ticks to 63.52. We'll get into that in a little bit here later with you as well, Shai. Gold continues to rotate lower. Tariffs, no tariffs. Tag you're it.
Right. So really, what happened is we had the premium come out of the futures market. So after Trump tweeted yesterday, no tariff vow, that said, we have nothing in writing specifically yet. So we do have Switzerland this morning saying that we want something in writing. But so the premium, meaning U.S. futures were trading much higher than spot. So since he has tweeted out that now that premium has sort of collapsed, and now we're trading near, COMEX is trading near 3,400, and spot gold is around 3,350. So initially we had spot trading much lower than that spike on Friday after we heard that news. So that premium has kind of collapsed a little bit.
Yeah, and when you look at gold, I said it yesterday to Jimmy, it looks like a high now. I mean, it's one of those things. Sometimes a headline, whether it's true or not, can cause a move, unfortunately. And I think that high, I'm not saying it's the high, but I wouldn't be surprised if it is the high for a while now. I really wouldn't, because it's got, it's got a momentum shift. You get overbought on the RSI, you pierce a Bollinger Band on a 3 standard deviation. You get a move that if you've been long, you're saying that's an opportunity to get out and you didn't. And now, there's no new headlines to drive it forward. It's kind of a rotation.
Yeah, and I mean, if we do get rate cuts, we probably will get another bid in gold, whether this is a high is already in or not. But
You think we're going to get rate cuts this year? And,
well, the market does.
Yeah, exactly.
So we'll see on that one.
Today will tell us a lot, I think.
Yeah,
Should.
absolutely. Well,
Yeah.
we had J.P. Morgan yesterday. I mentioned said this is the most important CPI number ever until the next one, but
Sure.
we'll find out. We also did have Trump extended the China truce for 90 days. Shocking. So we kicked the can for another 90 days. What that means is that the U.S. was going to have 145% tariffs on China. China was going to have 125% on the first truce. They agreed to go down to U.S. having 30% duties on China, and China has 10% duties on the U.S. So that will continue for another 90 days.
Yeah, and here we go. Let's get to Jimmy now. I mean, bond market this morning down ever so slightly. 10-year this morning comes at a 4.28 in the yield. Euro also very flat, which means anything against the dollar is pretty flat. Swissie's up modestly against it. Yen and euro flatted down a little bit. Bitcoin down very modestly at 118,785 on the futures. ETH sits at 4,300. Jimmy, overnight in the tape, what comes out as you? What are you looking at coming into CPI today?
Yeah, I mean, I'm staring at this 30-year bond market to see if we can get any clues to what's happening. A lot of times, in my opinion, the 30-year bond futures are smarter than some of the other markets, and they look ahead. And it doesn't look like we have much change until you kind of think about the last 5 days. The last 5 days, we were at over 116 handle 5 days ago. Today, we're under 115. We're at 114.27 30 seconds. So prices going down, yields going up. Cash yields this morning, 4.861. And this might be anticipating a tricky CPI number that, again, it's anticipatory. It could be wrong. But in my mind, I look at this first and say, okay, are we thinking we're going to have just an awesome CPI number or a bad CPI number or somewhere in the middle? My guess is it's going to be sticky because the bond market is doing what it's doing right now. It's down a decent amount over the last 5 days.
Yeah, I mean, let's talk about that, Shai. We were talking earlier this year where the range of expectations for a lot of these numbers was pretty wide. I think things have started to narrow in a little bit on these big data points. What is the range of expectations for today?
Right. So the range of expectations today for the lowest, we have Jefferies at 0.17% for headline and 0.25% for core. And at the highest, we have Goldman Sachs at 0.27% for headline and 0.33 for core. So between 17 and 27, although believe it or not, that is a much smaller range than we've had.
Yeah. And again, I think if that number comes inside that zone, not much. I mean, again, we love overhyping and over-anticipating these data points. But in August, again, I hold everything in August with a grain of salt because no matter how long I've been doing this, every August seems to be, not everyone, most of them seem to not really matter much in the overall tape. And which gets interesting right now as we continue to grind up towards all-time highs. It's like I look at it and say, as I wrote in my note this morning, unless it's a banger of a number, hard to see like this be the beginning of a pullback here, right? I mean, when you're sitting in the middle of summer, low volume, low volatility, it's just like grind up until, something really kind of derails it. Something needs to derail it a little bit.
In my opinion, I really don't think that we're really going to start seeing CPI run hot until we start to get into the fall, because so far what we have been seeing is most of the companies have been swallowing these tariffs to the tune of like 64%, and those costs haven't really been passed on to the consumer. As we get into this and some deals are more final or so, I do think companies worried about their bottom line are going to have to pass this off to the consumer at some point.
Yeah, no, I mean, that's a great point. And, again, this morning, where I'll be watching for the action is what happens in the dollar, what happens in the bond market. As Jimmy said, when we grew up into this space, we watched the bond market. We always felt the bond market was smarter. I would actually challenge that now, because the reason why I say that is because big tech has changed this game. And when I look at what big tech is doing for leadership, it seems like they can block off anything that's happening anywhere else. They've got so much money that when they're going up, the S&P and NASDAQ just go up. I mean, they may not go up right away, but eventually they find their way higher. And the bond market, unless rates move dramatically, I talked about this, the only time I saw the bond market really matter to me that much this year was when we were going down very quickly earlier. Right. And I'm like, that matters. Because the future of interest rates, when companies don't know what that's going to be, that's a real problem. But inside this range here, it's like, yeah, I'll watch them. But unless this number is really outside of expectations, traders, I would look at this.
Yeah. Oh, okay. I'm sorry. Okay. Oh, okay. All right. I was extraordinarily nervous there for about 30 seconds.
That like button because you never know what could happen. We may not be here in a few minutes. Hit the like button. We did hit 142,000 followers now. We're on the path to 150,000 because and as numbers go higher, they get to those numbers eventually anyway. No, but in all seriousness, 150,000. We're doing a lot of giveaways here on the NinjaTrader Live Network. We've got a huge giveaway getting ready to go for at 150,000. A lot of exciting things we'll be announcing. We don't know what they are yet. I just keep telling everybody this, and everyone's going, Jesus, what's Stelly talking about? We don't know. So let's get there quicker. Let's put the pressure on everybody to do something really cool.
I do want to go over the data today because we do have more than just the 8:30 data. Earlier this morning, we did have small business optimism, and it did come in. That was at 6 a.m. Came in higher than expected, so small business optimism is higher. Now, for the rest of the day, we have 8:30 CPI. We know that real earnings. 8:55 Red Book non-market moving. 11 Cleveland CPI non-market moving. 12 we do have the WASDE report, which if you're trading ags, that will be very important and market moving. And then, of course, 10:30 we have crude inventories.
Yeah, that's right. We've only got a minute till we get to the Edge report. I want to do a quick kind of thoughts for you. Do two things. One is thoughts on crude oil. Continues to kind of bleed lower. We continue to talk about the energy story and preview our guest today. Very exciting.
Yeah, so, for the crude market right now, I think it's really waiting to see what happens at this meeting with Trump and Putin in Alaska to see if there's going to be some sort of ceasefire or some mention that we are not going to put any more sanctions on Russian crude oil. So I think we're pretty much in a lay and wait until Friday on that one. And then today, interesting, we have Jeffrey Hirsch, who is the Almanac trader. And we're going to talk to him about it. It comes out every year. He's got the stock market almanac and the Almanac trader. And it comes out every year, I guess, and it's all full of stats on just the markets. So we'll kind of dig into some fun stuff with him.
I love stats. I'm excited about having him. First time I'm getting a chance to talk with him. But before we get to the Almanac Trader, it's about that time, everybody, for this morning's Edge Report. Take it away, Jimmy.
All right. Well, let's start with the mighty Russell today. Russell 2000 daily chart up on the screen. And you can see the last 1, 2, 3, 4, 5, 6 sessions, small body candles. In the coin of phrase from Shai, this market is coiling tight, looking for a breakout one way or the other, but totally sideways. Moving averages are sideways. We're right at a 50% retracement. Stochastic sideways. Ready to go. Intraday, we do have some targets here on the mighty Russell. We're a nice kind of point of control today at 2230, a little bit to the north part of the chart right now, so maybe a P-shaped distribution, but probably an immature also, so this will fill out a little bit as we go. The highs today pretty much match the London initial balance highs, but we are trading above VWAP right now. You can see the session VWAP. We did spend some time below it. Now we're spending some time below it. Above it, I'm sorry. We'll probably settle somewhere in the middle before the actual release, which is coming up in a couple minutes. But we have some targets to the upside. We have R1 up here at 2236 half. Above that, previous session's high and that 0 DTE call resistance and gamma wall provided by Mentor Q. That is at 2240. For the bears, we have that Jax 2 kind of forming the bottom of the conversation right now, 2225. Below that, previous session's lows in Jax 4, 2220, and then S1 way down here at 2217. Some pretty nice targets here on the Russell. Let's shoot over to crude oil, though. We were just talking about that a second ago, and it's kind of an interesting daily chart. You know, we do have this kind of sell-off here below that $64 handle. We're tracking 63.50-ish right now. And you see this bottom rectangle I have here. Let's bring it all the way back. This was support, right? This was support in May of this year. And it was right at that $60 level. We found buyers. We couldn't get below that. So I added that area of support here as another target. The idea that we can't go any lower, forget about it. That's not a good idea. We could go lower. We might not, but we could go lower. So there's my next target on the downside if on this, if this continues to grind lower in crude oil. Intraday, we probably have some good targets. Let's check it out. This is a 30-minute chart again, and let me open this up a little bit more so we could see it better. Trading well below session VWAP right now, creating a second kind of volume node down here around 63.53. If this continues, I'm going to declare this a double distribution day. The official point of control is pretty far north up here, which is kind of going right through the middle of the London initial balance. So right now, sellers are in charge. We hit that Jax 1 level at 63.50, and that's where we're sitting right now. We have room to grow, though. 63.25, Jax 3. We have S1 right below that, and then we have a high vol level down at $63. That's for the bears. For the bulls, if this thing turns around right in the middle of the chart here, you're going to see that $64 even level, psychological level, put support is right there. A little bit further, previous session's highs, and then that Jax 2 level is up at 64.50. Let's shoot over to the market that's just on fire lately. This is the micro Ether, we'll call it. Now, the interesting thing here is we have 57,000 contracts traded so far. I mean, this is an amazing kind of renaissance of this cryptocurrency. And this is the futures. It's the micro. It's tradable. There's volume there. So we have this breakout of this consolidation pattern right here, this consolidation area. And boom, 1, 2, and then 3. Yeah, we have a little. It's a small candle, a small baby candle with the gap is still there. But sellers haven't decided to fill that gap yet. So this is a pretty strong marketplace right now. And look at the stochastics. I mean, we had that crossover back on the 8th, and we shot up to, we're almost at 90 on the stochastic. So this is a pretty strong daily chart. Now, there's not going to be any gamma numbers for this market, at least until it matures a little bit more. But right now, just kind of looking at the point of control right here. Again, right now, capital P-shaped distribution, 43.25 half, trading above that volume weighted average price, that session volume weighted average price all morning long. Again, buyers in control. And even if you look at a stochastics on an intraday, it's still, we're sloping up. We got some room to go. And I've been adding a commodity channel index lately, and we're going to talk more about that later. But targets, R1 on the upside. Should we break out of this London initial balance high? 43.80 half, and that's just short of that previous session's highs. And we got a lot of empty space all the way up to R2, which is at 44. Hang on, everybody, drum roll, please. 44.89 even. On the downside, if we get any downside, S1 previous sessions lows are about the same price. 41.73 would be my target. But right now, everything's looking good in the micro ether. That is this morning's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. We are now joined by Jeffrey Hirsch. He's the CEO of Hirsch Holdings and the publisher of Almanac Trader. Jeff, good morning. Great to meet you.
Good morning. Can you guys hear me okay?
We can hear you loud and clear, man. You're looking
Super.
good, too. You're wearing that headset nice with the glasses, looking real sharp this morning. So great to meet you.
Yeah, these are the new ones. Are they reflecting
I want to start off
the screen or what?
No, man, they look good. Look at me. I mean, I got them now too. I mean, I'm at the age, Jeff, where it's like I need them to be able to read the stuff that we put on paper a little closer to us. I got to make sure I've got them on. Plus, I'm styling them a little bit too, aren't I, Shai?
Yes.
So, Jeff, great to meet you. Great to have you on the show. First time getting a chance to speak with you. Tell us a little bit about what you do with the Stock Traders Almanac.
Well, I mean, it's as old as me. My father started in the 60s. I grew up with it, born, bred, weaned, raised on, seasonality cycles, patterns, trends. And every year we go through and update, add new things. It kind of rolls through with a sort of a 4-year election cycle pattern. That's something that's my father put on the map that we continue to, talk about. A lot of people are talking about these days. We're looking at a summer post-election year peak here. It's kind of lining up pretty well. And then we take all that information knowledge and turn it into, portfolios in our newsletter, Almanac Investor. And we throw out a few things to the world on social at Almanac Trader. So basically combining seasonal cycles with fundamental technical analysis, monetary policy, sentiment, and constructing portfolios. We got a tactical seasonal switching strategy. Everyone knows sell in May and go away. I like to say you got to buy in October to get your portfolio sober. So we have that based on Dow, S&P, NASDAQ, and Russell. Sector seasonality trades, stock picks. So it's a pretty robust and thorough service.
I love that you're carrying the torch from your father into this. I think that's fantastic, and I think that it's really important to have someone like you in this space. So I really am glad to hear about what you're doing. I had not really followed it much before. I found out that you were coming on the show, and I'm really excited to dig into a lot deeper into it. And with having you here today, let's talk about August. So we've got CPI coming out today. So at some point, we're probably going to break for that, and we're going to go over that news with Tracy. But where are we in the timeline for the year? Like, what is coming up that is triggering stuff for you guys right now to report to your viewers?
Well, I mean, it's a seasonal, behavioral finance based pattern. I mean, people go away. I mean, I'm heading out this week with my wife on our vacation. People start to take time off from the street. The old saying, Wall Street goes out to the Hamptons. But it's generally a quieter time. Once we get through some of these data points, people are going to start showing up positions. And, that lack of volume or that sort of closing things up tends to create that vacuum in August, which has made it the worst month since 87, 88. September is the worst longer period, and the two of them back to back are the worst 2 months of the year. So if we don't get our comeuppance and I don't expect anything major, one of those typical summer fall corrections of 5 or 8%, somewhere in there. If we don't get that August sell off, we'll probably get it in September when folks come back to work, to school. It's the end of the third quarter. Institutions and managers are restructuring portfolios, window dressing for Q3, end of Q3, and setting up for Q4. So that's what creates that seasonal, drop, the summer doldrums, we call them.
So seemingly, since we bottomed out in April and have rallied back, I mean, seemingly we've had little to no volatility all spring, all summer. Everybody's wondering, is volatility coming back to the markets? You know, they're kind of bored a little bit trying to day trade this. So are we going to see volatility again?
I mean, are we going to? That remains to be seen. Does it tend to pick up around this time of the year? For sure. You know, there was a study we did with this low volatility streaks. We had 26 days where the S&P did not go up or down 1% on any given trading day, and we broke that to the downside. I think it was 2 Fridays ago. It was August 5th, I believe. Oh, the 8th, I think it was. No. It was the 1st. The sell up on the 1st. I'm sorry. So we broke that low volatility streak that tends to lead to a more weakness. We've been bouncing around, very typical August behavior, chop up and down, not really gaining a whole lot of ground. And to me, you know, when you guys were talking about the 30-year earlier, something we're looking at, that's ticking up. I've been sort of not convinced we're going to get a cut in September. We've seen the CME futures come down about 10 percentage points from about 92.5 to 82.5 right now, or earlier this morning. So I'm concerned that we might get a little sticky inflation. I don't think it's going to really impact the economy and the market until next year. But right now, volatility probably going to pick up a little bit. I would suspect a little downside action, but nothing crazy, nothing sinister. 5 to 8% perhaps on the S&P Dow, maybe a little bit more Nasdaq, Russell. And then the smalls, I am not convinced they're going to be able to turn around just yet.
Well, nobody is, I think.
We don't.
Oh, wait.
Markets.
Let's get our contrary antenna up. If nobody thinks, then maybe they will turn.
Yeah.
But we did have small business optimism come in higher, so who knows? But, you know, that seems to be the consensus trade is short the Russell, so we'll see what happens. What do you expect the Fed to do? Because it seems like everybody is very optimistic that we're going to have 2, maybe 3 cuts this year. And to me, that seems maybe a little off the mark.
I think that's a bit wishful. We've been back and forth with what people were expecting from the Fed the last several years. It hasn't really worked out. I think that could be the disappointment in September that we don't get the cut that everyone's expecting, hoping, demanding from some courts. But I think that could be one of the September disappointments that, you know, has us do that, end of Q3 correction. Again, the economy looks pretty strong. We did get some, weaker jobs numbers, but I don't know. The Fed used to be guardrails, and they used to listen to the bond market, listen to the market, and make some adjustments. Looking at the long treasury, the long treasury, the 30-year, like you guys talked about earlier, that's telling me that the market's saying we're not going to get a cut yet, and it's not quite in the futures yet. So I'm not so sure they have to cut. I'm not in that camp of the Fed's behind the curve. They're supposed to be behind the curve. They're not a speculative body. They're supposed to come in and fix things up and make some adjustments. So I'm not convinced they're going to cut in September.
Yeah, no, that's a good point. I think that everybody gets so caught up in the Fed being almost perfect in a lot of ways, right, Shai? I mean, I've been doing this for a long time. I don't remember a time where they've ever really been ahead of the curve. Greenspan
by design
was
they
cutting rates,
can't be.
And yeah, exactly.
They're supposed to look at data,
Yeah.
So
No, that's such a great point. I think that we get so caught up in them being perfect. It's very hard to say. Jeff, we're only 1 minute and 15 seconds away from CPI. Coming in today, we're going to be watching the ZB. I'm going to pull that up on the charts. But with just about a minute to go, we're going to go to Tracy right when that number comes out. But anything else you think we should spotlight on currently in the markets that you're watching?
CPI historical average is about 3.1%. So where we're at right now is not historically horrible. What we're looking at right now in the newsletter is sector-wise biotech, information tech, and gold and precious metals are coming into season. So those are a few things that we have on our recommended list. And then back to the small caps, there is a little bit of a pop, seasonal historical pop right around Labor Day for the Russell small caps. That's another little thing that traders can look for coming towards the end of this month.
Yeah, and when I pull up COT data, and Shai, interrupt me anytime you get these get the data. COT data, you got the commercials. The longest they've been the Russell since, let's see, man, you got to go back October of 23. So it's the longest commercials have been since October of 23.
And we had the data come in. So we have CPI year over year came in at 2.7%, lower than the survey of 2.8%, same as prior. And year over year for core, we had a little bit higher at 3.1%, expected 3.0% prior to 0.9%. So CPI a little softer, core little hotter.
So initial reactions, everybody, bonds are now up 7 ticks. They were up as much as 11. You've got the Russell's up 27 now. Big move in the small caps.
Because we were just talking about it.
And then you have NASDAQ is up just about 100. S&P is up 23. Markets are taking it bullish. Even, the euro's up against the dollar as well. Yen flat against the dollar. But overall, CPI, bullish for markets is initial reaction. Shai, any sort of repercussions, anything that we look at beyond just what we're seeing on the initial reactions?
No, I mean, I don't think these numbers are out of control. I mean, we're still kind of in that range.
Yeah, and gold bounced too, but gold is back to even. Got a green board across everything now. Jeff, anything that comes to your eye following this CPI data?
It's kind of right in line. I mean, it's not lower. It just seems to be normal at 3.1. I mean, what was the number I just told you the historical average was? 3.1. So
Exactly.
Fed seems to be doing okay. I mean, and so does the economy. That's why I don't think we're going to get much of a seasonal correction, and we probably have another close to 20% gain for the year. I mean, our best case scenario that we put out last December is, for 12 to 20% or something. I think that is becoming more and more likely as we get into the latter part of this year. We had our big shakeout in April. It usually precludes us from getting another one. So, enjoy your summers, keep some powder dry, and look for a little bit of a dip to get back in. It just seems to be, quite all right. I don't know, kind of Goldilocks.
Yeah. I think, and I think the one thing is that, as traders, it's funny is we're skeptics by nature, right? And so we look at everything and say, could that really be kind of what happens? Because after you've seen a few cycles, after you've been doing this for half a dozen or so years, you've seen the same type of trade. And even for me, I look at it and go, it's hard to envision that that's exactly kind of what is seeming to play out here. Probably some late weakness. Even we talked with Jem Croissant, how he talked about flows coming in, right. Potentially get some weakness in August and September. And in a perfect world, we pull back then and then, right back up to all-time highs. It is interesting to see because sometimes I don't know how you feel about this, Jeff. Sometimes the most obvious is almost the most difficult to execute.
Yeah. I try not to think about the trades. I try to remove the emotions. So you just kind of stick with what you come up with when the market's closed or when you're not reacting, and just put in those buy limits, those stop losses, and stop losses I don't do in the market because they get hit. But you stick to your guns and just do the things that's most simple. Stick to the system. It's been working for close to 60 years.
Yeah. I want to move on and talk a little bit about gold. What is coming up with gold? Gold has been the strongest market so far this year. Just an unbelievable rally in gold. We had some headlines, no tariffs last week. We've been talking about it. Technically might be showing, that we might have at least a short-term high. Anything that we should be looking at through the almanac for gold?
I mean, interestingly, ironically, coincidentally, whatever you want to say, it's the beginning of gold bullish season. So we got into the miners, the junior miners, the GLD in early July. It's something that's kind of coming together with the macro forces that you're talking about and the seasonal trade. I mean, fourth quarter gold has always been a trade for as long as I can remember. It used to be, remember ASA gold? That was one of the futures in the old almanacs over the years. Fourth quarter gold. So here it is lining up with the macro trends and some technicals there. So when you get the combination of seasonal, technical, fundamental, macro picture, I don't see any reason for it to go down.
Yep. We're pretty much out of time, Jeff. I want to ask you one quick thing because it seems as though the theme is building up for probably bullishness into the end of the year, continue with gold, likely with the indexes as well. Anything that you see for the U.S. dollar, it's been a common theme that we've talked with a lot of macro traders on here. Weakness in dollar has been the trade as to why indexes are bid, gold's bid, crypto, so on and so forth. What do you see with the U.S. dollar?
I think it stays there. I mean, it's not something that's, with what's going on with the tariffs and the trade deals that, we're going to get much strength in the dollar. It's been the trade that trend continues. I don't see much knocking that trend off.
Got it. And we'll end it there. Jeff, this has been an absolute pleasure getting a chance to meet you. I love the story of you following along what your dad started. I think that's fabulous. I think that's great. I hope everyone in the chat goes and follows Jeff and checks out what he's doing. I know I'll be digging into it a lot more. It's an absolute pleasure to meet you here, Jeff, and thank you so much for your time coming on NinjaTrader Live.
Might as well. Thanks for having me, guys.
Thank you.
Have a great trading day.
You too. That was really cool. What a great guy.
Yeah, absolutely great.
Yeah.
So glad I got a chance. This is the first time I got a chance to speak with him. We've been following each other on Twitter for a while, but definitely love to have him on again.
Yeah, love his perspective. Obviously a lot of sector and stock and more, general longer term investment type mindset with him. And I really, like I said, I really enjoyed that. And it's interesting hearing just that, I'm somebody who looks at the cycles a little bit, where we are. That's why I've always liked Jem, because Jem is like, Jem talks about here's what the flows are going to be for X amount of time.
Right.
Because things always do end up lasting longer. And there are, I've never been someone who's, I've always kind of followed seasonality, but it's not something I've really dug into. But it's like you do this long enough, you almost could feel that seasonality. But putting some real math behind it and understanding where we really are over time was interesting. Everybody in chat, please go and hit the like button. I thought that was really great. Again, hit the subscribe button as well. We're on our path to 150,000. We're going to have a lot of stuff going on here at the NinjaTrader Live Network, and we appreciate all of you being here with us this morning. A lot still more to talk about. Shai, we'll see you in chat. We got more data, crude oil, everything coming up later.
Absolutely.
All right,
Thanks.
thank you. All right, let's go to Pharm. Pharm, good morning. How you doing?
Good morning to everybody except this morning's 62.91 sellers, Deli. But I do thank them for their liquidity.
Yeah, well,
good morning.
Yep. You know what? Let's go right to the charts this morning on CPI, everybody. So pretty much came right in line. What was really interesting is that Jeff called the number right out of the gates. He's like, the average is 3.1. It comes in right in line. And, the market continues to find anything it can through data, headlines, it can to rally. I said it earlier this morning. I talked about it yesterday. It's like, yeah, you had a little bit of weakness yesterday. But it's like this market continues to search for reasons to go up. Traders probably search for reasons for it not to go up. And, and that's probably why we're going to continue to go up, at least for now. I thought yesterday's pullback was healthy. You talked about it and said it'd be a gift if we got back down to 64.05-ish. I don't remember your exact numbers. But this morning as we come in, I'll go on the shorter term chart. You could see here in the NASDAQ, I just got a 15-minute up. Just took out yesterday's highs. And here we are sitting up near highs in NASDAQ. Initial thoughts off CPI, Pharm?
Yesterday was the classic spike down trap into an event. A lot of times you'll get a spike down into a bottom of a balance, and that's an enormous trap, and you can just take it the other way and it rallies all night. And then, a lot of times you'll get a spike down the day before data or something. And it's just, I mean, it's almost always a huge mistake from whichever side is spiking it. So no real surprise for me that we're seeing this. And I did choose that side of things for today. But yeah, I mean, the effective top of range, we talked about this yesterday, has been up here in these 64.30s, basically where we're sitting now. The good news for bulls is that I accidentally hit flatten instead of taking profit. So I don't have any long runners here. So we might limit up. But yeah, I mean, we're back to top of range. That's where we failed yesterday. And it just made yesterday awkward because we didn't get a good dip overnight, right? It was like 64.08 was the overnight low, something like that. And that was kind of just like a random spot. And bulls have been strong on dips and hadn't really been initiating on rips. And so yesterday was awkward because we tested higher first, basically, and failed up in those 64.30s. And so you just end up with these, kind of grind down days where, bulls are attempting to buy dips, but they're just not getting anywhere. And then you just left, out of a trade, for today, the one that you want. So that happens a lot. And I'm sure that happened to a lot of people, but, we're coming up back here. We've got an ETH all-time high on both NQ and ES that we're approaching now. And there's no reason we should not clean those up. And so really, I mean, you keep the bearish scenario in mind when everything looks good, and you keep the bullish scenario in mind when everything looks horrible. And so to me, the bearish scenario is we come up and we sweep out these all-time highs, make a cash hours high, and then fail back in range. That starts to look pretty bad. But short of that, the market has been strong, extremely firm on dips, and we're still in this 6-week balance, basically. And the breakout from this balance should not be small if it is sustained.
I agree with all of that. And what's interesting is, we talked about this yesterday. We had this 1,000-point pullback in NASDAQ. I talked about this, and it was very short-lived. It was only a couple of days. I mean, literally a couple of days. And take us down 1,000 points. Take us through the 821.34, moving averages, which I'll look at. Hat tip to a lot of my boys out there, Ripster. And, I like to look what the equity guys look at for this. It just gives me just a general idea of trend. You get oversold on the RSI, regains the short-term moving averages. Hat tip to Brian Shannon, who loves the real short-term moving averages. And once they regain them, and the slope starts to change, it's like we're back in bull market. And it happens so quickly that, again, I think, look at, we're having these, when you go back and scale this chart out, that's like a mini V bottom. That's like, okay, I mean, it's not like this, right? But when you look at it in the short term, it created some energy in here. And I said this yesterday, when you see these on the short term like this, in a couple of days, middle of August, you get this pullback that's fierce. You get some indicators telling you, we get a little bit oversold on the RSI. Again, RSI never gets me in any trades. I look at it all for perspective, and I look at it and go, there was built up energy that is now coming back out in a bull tape. I mean, they're going to go after that high. I mean, that's just it. I mean, it's like, and I said this before, I said, I like the market to probably go up and test this old Bollinger Band peak, which is 23,930-ish, especially when that top Bollinger Band takes out the previous peaks. This has been really one of the things I've looked at across my entire career, is that when you get a market that makes a Bollinger Band peak off of a high like you saw here, and then the Bollinger Band starts to come back up and take out that high, it goes to those peaks, it considers it unfinished business. What do I mean by that? It's a 3 standard deviation Bollinger Band where the market rallied up and we stayed 3 standard deviations away from the 20-period moving average, and that's a good move for the NASDAQ. And so when it goes up there, it doesn't quite get it. It pulls back into the moving averages. It a lot of times will go back up, and it'll test that point, because that was that point where the energy was building up in here. It didn't quite get it. It took this pullback in, and it goes right back up and does it. Now, the flip side is we get above this, and I talked about this with Jimmy Jude, my boy who came out this weekend, said, look, if we start getting above, I think he said 64.50 in the S&P. He didn't talk about NASDAQ. He mostly does ES, which is going to be pretty much quite in line where I think we're going to be roughly 23.9-ish here in the NASI. man, I just got nothing up here. And again, it could almost be a capitulation type move. A lot of people, I think, over anticipating some weakness coming into the end of August into September, which I actually don't discount, still doesn't happen, but a lot could happen until then. And so when I look at this market right now, coming off of CPI, it's like coming into a day like today, I would not be surprised if they just keep this thing on the gas right now. And, minimal pullbacks, the market continues to grind higher. When I look at the S&P, that bigger picture area I'm looking at is 6534 to potentially test. That's that old Bollinger Band peak. If you compare apples to apples on the NASDAQ to the S&P, the NASDAQ is stronger. I think they're more likely the one to break out in the short term and to stay broken out in the short term. They just continue to drive higher. S&P, I think, is going through a little bit more here. We talked about the Russell and the Dow. I'll flip to them real quick. Not looking really pretty much at all like the way that the other markets are looking when it comes to S&P and NASDAQ. And I think the S&P has some tentacles that are feeling that right now, even though if the NASDAQ makes a new all-time high, which I think is very possible today, probably more likely that it happens today, I think the S&P, I could still see it being a little bit of a struggle and being back and forth. As a short-term day trader, I think the NASDAQ is going to be where the more action is. I think unless you start to see the Dow start to come alive, I'm not so sure that it matters what the Russell does, but the Dow stocks, a lot of them in the S&P, all of them, going to probably hold the S&P back. It means that they're not performing as well. I don't watch breadth, but I would almost bet by seeing this that breadth inside the S&P 500 is not great right now. NASDAQ takes the small group that runs and continues to run, like Forrest Gump. Run, Forrest, run. And so that's kind of what I see here. I'm going to touch base real quick on the bonds just because of today's CPI, and we have to look at it. Sharply unchanged after the CPI number. I look at the bond market. They're completely trapped. They had a chance to rally here. Bollinger Bands are starting to come back inward. Moving averages are relatively flat. The bond market is giving us no signal of anything right now. It's not telling us much of anything. You're not seeing leadership in the bond market, higher that rates are coming down. You're not seeing, obviously, after a CPI that's right in line, bond market going lower, anticipating potential hikes, although I don't think that's on the table. But nonetheless, when I look at the bond market, it doesn't matter to day traders right now. It's two-way tape. You want to trade bonds, go trade them. I think they're going to be kind of a garbage trade right now. To me, the NASDAQ is the focus for the day traders. It's going to be action there. I mean, we're getting ready to potentially break out again. That's where I see it. Look at gold. One last thing, gold again here. It's like yesterday we went down, hit a short-term moving average bounce, but I think that this is a good high in gold. And I would not be surprised if gold really starts to struggle here to hold rallies. We'll see coming off of today's number. It caught a little bit of a bid early. We'll see if that bid gets sold. You come from an overbought scenario in gold, piercing the Bollinger Band. I don't know what they call that. Is that a doji? I don't know. I'm not a candlestick guy, but when I look at that, I go, it just looks like a high to me. Like we were in this range. They tried to break out. You said this earlier, Pharm, and I'm going to go to you after this. What would not be good for the NASDAQ or the S&P is a breakout like this that would look like this on the chart, and then it comes back into range. That would be, I think, what would trigger potentially the sellers to come into the indexes. I think you kind of see that in gold. That's my thoughts across the scope today.
Yeah, I mean, first thing I wanted to comment was, using old Bollinger Band peaks. I had never done that before. We all have our different ways of looking for, new upside levels when you're trading all-time highs via some form of extension or another. Some people use pattern extensions or fibs or whatever. I use more traditional extensions of value areas, balance ranges, distribution size, things like that. But I will say I looked at a couple of those, maybe a few weeks ago before vacation or something like that. And I mean, they aligned like perfect. It was very pretty. So I'm definitely going to pay attention to that and encourage that for other people looking at that, because I had never done that before. But yeah, and then the Dow, you mentioned the Dow, like 44,430, call it. I mean, it has just been nasty with the Dow. I mean, it's got a lot of potential energy if it can crack and sustain above there. And you're right. I mean, every day it seems like we come in and the Dow just gets hammered or goes nowhere, and S&P just chops, and then all the funds being had in the Nasdaq, and that's how it's been. So I do think 44 430s. If you're bidding that on pullbacks, if that really flips to a strong support, then I think that breadth probably opens up. That's basically how I look at breadth as well. There's all kinds of different ways to look at it, but to me, if the market is not bidding the Russell, they're not bidding the Dow, but ES is going up, then what are they bidding? Obviously tech, right? So quick and dirty way for us traders to just kind of keep an eye on things. But yeah, that's the big spot I'm watching there is the 430s. So for me this week, if I would have had my way, we might have gotten a nice trap down to, the 63.75, 63.77 spot. But the fact that we spiked below this 92 to 96 spot, keep in mind, I think we talked about this yesterday and really last week. I tweaked the levels each week a little bit, but basically, if I kind of zoom out here, this spot here keeps ES within, this kind of smallish upper distribution from last week, and more importantly, the main distribution from that trailing week. And so that was the big spot. And then you have, your range, your extreme top of the range. For me, I use cash hours numbers. So 64.51 is your cash hours high, 68.5, which again, we talked about that as being a misprint. That was supposed to be 69 for ETH. But really 64.30s was kind of your effective top of range. You just see like pops were sold pretty quickly and aggressively above there. And that's kind of where we stalled out yesterday. And so you're right. Everything looks great right now. And the most, bearish scenario is to come up and clean up these highs and then somehow just nuke back through range. But even still, we haven't really seen bearish setups produce bearish results in, quite a long time. It seems like we had a couple of red days last week and, people, but it never took out a prior day low. We talked about that yesterday. So people would come out and say, oh, there's a lower high. And then we just ripped the next day. And so, to me, I've just been urging patience and, avoiding bias as we trade in this range, because it is still a range and we are still inside that range. We still have not cracked and sustained 64.51 on a cash hours basis. So everything looks great. Bulls are very much in control. That can change quickly. What's going to be the reason that sellers decide to wake up and sell this thing? I don't know. I'm not predicting that. I was long this morning until accidentally hitting flat and all. I would have liked to carry a runner. But that's my concern. You get a decent CPI, you get a good reaction, you get an opening drive higher when cash opens, and then can't sustain it. And then this whole thing fades like that. Again, it's always worse to sell off on good news. Or at least, news that's received well. So and the same type of thing at a bottom. If you get horrible news and it's a given stock where it's an index and it just can't sell anymore, that's pretty bullish. So those are the types of things that I just keep in the back of my mind as I'm saying, hey, this looks constructive. I plan to focus on longs, and then just react if something is different. Because you would if you're bearish, you would like to see a cash hours all-time high. It's not like you can't pull back 3, 5, 8, 10, 20% off of an ETH high, but it's just more likely to pull in some stronger sellers if we do get that high, just like gold. So, very cautious on rips still. This is top of range until proven otherwise to me. And so I'll remain cautious anywhere up near here. And given the fact that I took this trade up to 30s, I'll probably sit here for a while and see what happens. To me, it's safer to buy a dip above the breakout later on, even if it's tomorrow, than it is to chase up here in the 64.50s, hoping that this is going to break out and sustain to the upside. But I agree, upside targets reasonably, mid to high 6,500s. And then we talked about, obviously a full extension up into 6666 to 6669 makes a lot of sense. And then, again, we'll see. We'll see if this breakout sustains. But I'm very neutral objectively and taking good trades until that happens.
I want to point out something you said I think is extremely important. What would be a change in character off of a CPI like this is that we do have a breakout, like you said, and it comes back into range and fades. I agree 100%. That's when all of a sudden you'd start to look at this market and say, look, it can't sustain a rally on good news. It just means that buyers are done, right? That's that's one of the most important things I think to watch right now is coming off of a data point, the most important data point of the week. You come in today, we're near all-time highs. I'm glad we have Chris and Merritt here this morning. I can't wait to see what they're going to be doing on when we go to the RTH Open, because if it starts to sustain above it, like you said, my thought is they probably try and pin it and grind it up. But if it goes up and maybe either makes a new high, it already took out yesterday's high in NASDAQ. I don't know what S&P did. And if it starts to come back in that range, that's where I really love volume profile too, because I love seeing the profile being built. You go up there, you make the low volume on the highs, and it comes back into the belly, and then all of a sudden it can come all the way back down. I think, again, every morning what we try to do, Pharm and I and everybody on the team here at NinjaTrader Live, is to give you guys perspective, open your eyes, help you guys become better executors of your strategy, because your strategy is for you. We try to open your eyes up to understand the market environment. And to me, that's an important part of the environment today is, can the rally be sustained coming out of a CPI number? A change of character would be a try to drive higher, come back in range after either making a new high and starting to fall. That would be something I'd be very cautious of buying a dip.
Yeah, so it brings in kind of an awkward spot here into the open. We've got 35 minutes until the open, and as of now, it looks like we'll be playing this as a true gap up. So, which means, if you're a true gap up is we are opening cash session entirely above yesterday's cash hours range, and so yesterday's cash hours high was was it like 32, 31 and a half, something like that. On ES, and all this readily translates to NQ. So if I don't have time for NQ chart today, it's all the same concepts. And so the ideal scenario would be, as long as any pullback holds yesterday's high and we're kind of like just above it, then objectively that's a long. If we open in whatever opening range you like, whether it's 30-second or 1 minute or 5 minute, or maybe you're slower and it's 30 minutes, that's fine. But I mean, if that's a big red bar, and we just can't find any bids above the open, then you do tend to expect this back test, this broad general rule. And so you're watching that open. If we lose yesterday's high, which we still have 35 minutes, we could do that even before open and not open on a true gap up, right? I think you're watching this 19 to 22 spot as your potential trap spot. And I would say probably closer to 22. I'm not sure I'd want to see 19 again. If I'm a bull, but to me, that's a potential trap spot. I always look for one or two traps back within the prior day's range when I'm looking at a potential true gap up, because the risk that you keep in the back of your mind, again, this is if we open above yesterday's high. It's kind of the same if we trade above yesterday's high. You come back into range, the risk is that you just engulf the whole damn day. And your strat traders will tell you that risk is a lot higher than I think that you would want to admit. So that's the risk that you keep in the back of your mind. And there's usually one or two trap spots where that can be negated. And I would say it's 64.22 on ES, most likely. And then in a normal world, I would say it becomes pretty likely that we at least come down to 63.92 to 63.96. That said, again, we have not seen bearish setups produce bearish results in quite some time. So even something like this 64.10, 64.11 half is this kind of random spot I was using for the overnight session. Clearly we can see there was a lot of selling below that spot, at least during the overnight session. Maybe something like that holds for a quick trap. Bulls wake up and they just re-break this thing out. So that's kind of what I would look for. Big picture. My plan for the overnight session, for the subscribers was like, look, you can trade your bias, trade it at a good location. If you're looking to be short into CPI, this, 10 to 11 and a half spot, if this rejects and gets back below, kind of 4 to 5, we can come back down to 92 to 96. You could take that trade. If you're bullish bias, you're looking for any kind of failure to get through 92 to 96. We got that. And that was the winners. But you can always take good trades at good locations and make money, even if you get the big picture wrong. So big thing for me is going to be all about I'm not going to initiate a trade right here. And if I did, it honestly would probably be looking for a short, and I'm just not really interested in shorting this, which might be really bearish since I said that. But yeah, it's that failed move higher that is problematic. And I still would prefer, if I'm looking to be short this index meaningfully, I would still prefer a new cash hours high. If we don't get it, and like we just end up coming down below yesterday's low today after this, it's going to look horrible. So, I mean, we'll see. Those are the spots. Those are the potential trap spots. Bulls need to find a way to bid through these 64.30s. That to me, bidding 64.31 to 35 from above, most likely triggers the big breakout that you want. You really have to find firm bids. That's got to flip to firm support. I'm not talking about a couple of 1 minute candles or something. It really needs to flip to firm support to drive this breakout.
I'm with you on that. I think this area right up in here right now, I'm looking at it in NASDAQ, looking at it in S&P. I know if anything, it maybe does try to pull back here a little bit today. That's why the regular trading hours open. I think it's going to be very interesting. I'm going to be watching the opening range, see what they try to do, and maybe they try to drive them in one direction. If it's sloppy choppy around opening range, which I look at the 30 seconds opening range to determine what that will look like, that's off of PAX. It's, that's where I think you really have to wait for this morning. I think over anticipating right now, and this is like we're in almost this time period where I think 9 to 9:30 coming off of CPI. Careful trading right here. I think everybody, it's like we really need to see those new set of participants come in right on the cash open. Love your work, Pharm, as usual. Great setting us up for the day. Everybody, hit the like button for my boy Pharm. Make sure you go and follow him what he's doing. Check out what he's doing on the Substack. Of course, follow him on X. Pharm, great having you here. Have a great day. We'll see you tomorrow.
Have a great day, Deli. Take care.
All right, everybody. It's Tuesday. Normally, it's just Tuesdays with Merritt. Merritt, he's a guy who finds his edge in the edges. He's got cat-like reflexes when he comes to his execution. There's a joke there. And then you got my boy Chris trading boxes. God, when he comes in, I look forward to his pre-market routine pretty much more than anybody. Just lays it out there. He's been killing it here on NinjaTrader Live. So I'm super excited for trading the open today with Christian and Merritt. Good morning. How are you guys doing?
Good, man. How are you? What's up, Chris?
Hey, Deli. Good morning. Hey, Merritt. Good to officially meet you.
Likewise.
Oh, this is the first time you guys are even talking together.
Yeah.
Yeah, we're
Well,
sitting down and trading together. I think he's already in a trade, so I got to catch up.
Oh, Merritt's already in a trade? Well, let's go to the screens right away and let's check it out. Let's see what Merritt's got going on here. All right, Merritt. First off, you back home. Looks like trip was good, rested, relaxed.
Yeah,
we saw you in Chicago. You had, you've been at the lake. You were doing all sorts of stuff. Good to have you back at your screens. What are we looking at this morning?
The market has been annoying lately in kind of a funny way, where a lot of the best NADRO style setups, the methodology that I use and teach and whatnot, a lot of the better kind of swingish ones, like the longer term ones, they've literally been setting up into the close. It's super annoying. And we were talking about that yesterday in our community chat and whatnot. And so thankfully, we got this little rug pull right here. And what could have happened is, okay, into the close, either you buy it and the overnight just leaves you, right, which happens a lot of times. But anyways, it's just a really classic setup here. As you can tell, this is kind of where we had resistance and the upper edge of value from last week. And so this is kind of a test of that edge. It's a test of the lower standard deviations for the current week. So it's a test of that edge. So just putting on risk where I had that asymmetry, and I got lucky with the news release. I scaled off most of it before the news, just to reduce risk and mitigate that. And then obviously a little lucky here with the CPI.
Yeah, and everybody, that's the one thing is like, Merritt knows that the data points are coming, obviously, but he doesn't let a data point, and I don't want to speak for you, but I'm kind of speaking on your behalf because I want to emphasize this point that if you have a trade that you like going into a data point, it's just about working a stop. It's about reducing size, doing the things that you said. Maybe quickly touch base on that before I get to Christian Merritt, because people are probably like, oh, he's trading into CPI. What's that look like?
Yeah, for sure. For sure. I think there are certain econ releases and events where they're just a no touch. It's too frisky. You just do not want to mess with it. And there's others where, the market kind of has a good read on what's going on. Obviously, big shocker numbers can come in at times, but that's the risk you take. What I like to do is avoid the highly, highly anticipated stuff that could really wreck you. Don't hold positions into that. If I'm in a position and I can get scaled out with a nice favorable movement and really reduce my risk and book some P&L, kind of pad that trade, if you will, and have a stop where I like it. Obviously, slippage is a factor if you do get ripped on a release. Then at this stage in my career, I am comfortable holding into most numbers, right? But again, some highly anticipated FOMC, I'm not going to hold a position into that, but a lot of stuff I will.
Yep. All right, let's go to you, Chris. Good morning. Great to have you here. Super excited to have you here with Merritt. Let's talk about pre-market here. This is the time where I think so many people have really learned a ton from you on your pre-market routine and preparation coming into the day. What are you seeing coming out of CPI heading into the open?
Yeah, so I'll share my plan. And Merritt, something I do for my streams is share. I'm a very visual guy. I draw out my scenarios. A little bit like you, I focus on location, on context, and specifically on trend structure. So I combine all of those to create an approach that allows me to, consistently try and be in aligned with the trend. And that's what I try and showcase that here. It's a combination of support and resistance with these zones that I have here, and then trend structure, which, we can go over that during the stream. I think you'll like, but, NQ has been a little bit of a mess. We've been in this multi-day range. We attempted to break out of it, has pulled back. I have these zones here that so far we're holding this 580, 600 area. And, some of these times, these zones might align with what you're looking at as far as the areas that you're looking at in order flow or things like that. But the main area of support was that if we could hold 580 to 600 in NQ, we can attempt to push up into all-time highs. If we fail there, I was looking for a move lower into then 450, 440s, which is another support area. But then the main area of support was this 330s area that we've been sort of dancing around for the last 2 weeks. We didn't really pull back that much. Maybe we do later in the day, but as of now, 580, 600 held. If we can now hold this sort of prior day high, maybe 740, 730s area, then I can see price forming acceptance, which is to me, a structure that resembles a consolidation, a correction through time. Shows that buyers are stepping up, and then we can push up to new all-time highs, and then what I would target 24,000 area. That's sort of my higher time frame structure. As far as the morning plan, it's how I am looking to execute. So I consider myself a hourly trend trader with a 2 or 5 minute entry model. On the hourly, we have broken out of this consolidation, this wedge, as we held this 580, 590 area. We're starting new a potential 9 MA uptrend, which to me is just a higher high, higher low, higher high, higher low structure, which is a typical trend structure. And we're now attempting to hold or backtest the 730, 740 area. So my first scenario for the morning is if we can hold here, create some sort of higher low, then we can consolidate for a bit, show that buyers are stepping in, and then we can push out to all-time highs, maybe find some resistance there and reject back down. If we then can form acceptance, hold above prior day high, 840s, then we can set up a little bit of a more sustainable move up higher. If 740s fails, like maybe it could possibly do right now, then to me, the first area of support that we can backtest is this consolidation or wedge breakout at 660s, where I'd be interested in looking for a long. If that then fails, then I would imagine we move back down to prior day low, 580 support area again. And until we really truly form acceptance there, I would be expecting a bounce back up. Just since all, to me, all higher time frames are still bullish, and I'm looking to see if we do commit to that move into new all-time highs. So Delhi, I'm a little bit on the buyer side here. There's nothing really confirming that sellers will show up. They never really had in the last few weeks, so I just have to stay aligned with those.
Yep. Well, all right. I'm going to leave it to you guys. Everybody, you're in for such a treat today. You've got two great guys, two guys that are so clear in their preparation and their strategies. We're in for something special today. Watching, like I said, just two of my favorite guys in this space trading together. I'll be watching you guys in chat. Everybody, hit the like button for my boys here, Chris and Merritt. Make sure you follow what they are doing on X. Check out both of them. Obviously, we got Apteros as well for Merritt. Make sure you go and see what he is doing there.
Hey, I
and
caught
make sure you
that
subscribe
cat-like
to their live
reflexes
channel.
little pun you threw in there.
Oh, did you?
I didn't appreciate it.
Yeah. I mean, you didn't. Well, I mean, it was. I was hoping he caught. I mean, I knew he caught it when it came in. He was
My
like,
man's
this,
giving
Chris. He
me
was like this. He was like,
PTSD before I start streaming on the open. I'm freaking out.
and didn't you say frisky too? I mean, they're really
I
the
did
cat.
say frisky, didn't I?
What's he gonna do? He's gonna open up a can of tuna in like 20 minutes. He's gonna start eating a can of tuna. We can go all day with this.
Get out of here.
You guys are the best, man. I love you guys. I'll see you. Bye.
See you, bro.
All right, take care, Delhi.
The funny thing about all that cat business is like, I apologize, Chris. I apologize, chat, but I hate cats. I'm allergic to them. I don't like them, and they make me one on the screen, and it just really, really triggers me.
You're allergic? Is that why?
Yeah.
Same.
Really.
Yeah, not a big fan. So tell us about this long here you have here. You already took partials, I imagine?
Yeah, I mean, I had to peel off most of it in front of the number just for risk purposes, kind of like we were talking about there. But quite a bit of selling from the high so far. Now, to me, it makes sense. Like, I'm not freaking out that we've retraced. That's normal, right? Like, we go to a really big extension. You have this kind of impulsive move. You run some stops through, highs from August 7th, highs from yesterday, that type thing. And now it's a matter of seeing what sellers have, which so far to me is fairly strong on the tape. But again, a retracement is expected. I'm kind of being pretty loose and hands off with this tiny runner here we have. But the trade was absolutely perfect. It was just it sounds like we might be similar in that every trade I'm taking is a form of a pullback in some way. It might be a trend play, but in terms of the execution, in terms of how I'm timing it up and whatnot, it's a pullback. And so this pullback into the close yesterday would have been perfect. Any of these overnight ones, and we just got fortunate that I was at the screens and looking for this little stop run below the lows. Buyers stepped in, and it's from a perfect trade location per my kind of contextual higher time frame references and stuff like that.
Yeah. So look, I wanted to see if this stream we can be a little bit. I mean, they're always educational. I watch them for you, but I have a similar approach to you. I'm a very location-based trader, and I think if we can sort of speak on that for people watching, I think that would make a good stream session for them. You talk a lot about location. What would you say are sort of like the top maybe 3 things that help you identify location as a viable opportunity to engage and then execute in that area?
So pretty much everything I do in that regard is based around the concept of value areas. So I will have market profile areas with their value areas. I will have multiple what's called long-term VWAPs that we refer to, and one that I'm sharing here on the screen is the weekly, right? So this is weekly VWAP with multiple standard deviations away from it. From the plus and minus 1 is what I consider the developing value area for that period. And then I'll look at where prior value areas are. So last week, we finished with the plus 1 right here. Guess where I took this trade from, right? The pullback to that area and leaving it. So I'm also trading from the lower edge of the standard deviation of the current week. So when I'm talking about trade location, to kind of succinctly answer your question, it's about a confluence of different time frames, value areas, and essentially 2 basic setups. Either we're either inside value and I'm fading the edge of it, or we've broken out of value and I'm fading the retest of it, right? It's super simple. But putting that together across 5 time frames and ranking and distilling those where there's dissonance, where things don't agree, all that kind of stuff, that's what's that's where the magic happens.
Yeah. Good answers. I think that's what, would help a lot of people is if they are able to identify, well, first define and then identify what really good locations are on however they're viewing their chart. I found that really, as you say, trading the edges or your edges and the edges, highest probability reversals are in that area where both buyers and sellers are like, it's a really inflection point where they're negotiating a certain direction. And if you can come to understand whatever tools may help you to identify that location and make it like an A+ area and consistently track that like you are doing, then I think that takes out a lot of the heavy work, because you're letting the market bring you in an area where you have very minimal risk. And if everything goes well, then the trend away from that area will just, be maybe 5, 7, 10x your risk. And to do that consistently over time, you have a great trading career.
Yeah. I mean, I always talk about having a great trading career in terms of sitting on a 3-legged bar stool. One leg, if you cut off one of the legs, right, the bar stool collapses, right? You're flat on your face. One leg is risk management. You have to have a risk plan. You have to be disciplined about your risk. It has to be a sacred thing for a trader. And we all learn that, most of us, the hard way. I know that was the case for me. The second thing is your psychology. All right. If you can't bring your best self to the table, if you can't do some of the things that Pax was talking about in a tweet yesterday about, taking care of yourself and your mind, your spirituality, everything, to bring that to the table, then guess what? It doesn't matter. You're not going to be able to do the things you need to do to trade well. And then thirdly, which I think is a lot of, what we talk about most, that's actually having an edge. That's what you were walking through there, which is like, for a certain type of setup, a certain methodology, what type of risk reward can you achieve, and what type of win percent can you pair with that? And a lot of times as you raise one, you lower the other as you're trying to kind of figure those things out. There's not a lot of free lunches in trading,
Yeah.
So yeah, you put those 3 things together and you can make a career out of trading. Doesn't mean it's easy.
Yeah, not easy at all. It's the psychological work of it is, like you said, you can have a profitable strategy, but if you aren't showing up as your best self with the beliefs that you may have, your confidence, your conviction, the mental clarity, the emotional, right? If you don't have a full emotional bank account, then you're not going to be able to trade that profitable strategy consistently over time.
I can get away with it for a while, but then it all catches up with you eventually. Like you can kind of cheat the system for a little while, but then if you don't kind of get yourself right, then you're kind of headed for a perfect storm of, like, I love how Jared Tendler talks about it, right? How, and I actually have his book right here next to me. I've been reading. I realize I'm definitely one of those people who I'll sweep a little something under the rug. I'll sweep a little something under the rug that kind of is frustrating or brings up a little anger or something.
Yeah.
And then next thing you know, boom, I have a reaction that's essentially unwarranted for something that happens because I've just built it, or you might look at it as depleting, that type of really good, your emotional capital and things like that. So, you guys on the stream have, I'm in a drawdown right now. You guys have seen me trade poorly for a couple weeks, after having a brilliant run for a couple months. These things ebb and flow. None of us are perfect here on these streams. I make mistakes. I have trader psychology issues that I work through, and I think that's one thing that's cool about this stream, and I speak for like everyone that I watch on it, is it's not a bunch of like P&L screenshots, ego boosting type of stuff. It's the real deal. You guys get to see us grind it out on a day-to-day basis.
Yeah.
I believe from what I saw, I didn't get to watch the whole thing, but Stowe and Leo had a tough time yesterday. I've had tough times on streams. That's the real day-to-day grind, guys. And if you can't be okay with that, if you can't embrace that, it's going to be an uphill battle, because you're going to be fighting yourself and fighting the market, which is not a good place to approach markets from.
It's
I wanted
not.
to ask you about the colored band area. Is that two different period EMAs? And then based on if the shorter one is higher, it's a bullish zone for you. And is that what that is?
Yeah, it's a 2050 EMA cloud.
Okay.
Its purpose is that it's usually, this sort of area here in the cloud, which you might know for sure, is usually the mean of whatever time frame trend you're looking at. That's how I see it. So, if I can touch maybe on the structure real quickly, the way I view price trend is a series of higher highs, higher lows. And then when that trend ends, we'll revert back to a certain support, and price will then start to consolidate. And in doing so, it'll create a wedge-like structure. And in that wedge-like structure, that's typically where the 20 EMA cloud comes in and provides support. And then from there, we start a new trend, either higher or lower. So if I can show a better example of this, we need a little bit more volume to see that with clarity. So let me see. A lot of these low volume moves overnight don't really create that structure, since we're typically sideways. So here's a good structure. So we started a new, this is our wedge breakout. We started a new higher high, higher low trend along the 9 MA. So I track the 9 MA to sort of on all time frames. As we know, markets are fractal. So what I'm looking to do is participate on a lower time frame, participate in this trend here. When this trend ends, by this time I've taken partials, and then price will end this 9 MA uptrend, or whatever, is it of up or down trend. It'll revert back into the 2050 EMA cloud, and then it'll create a wedge, as you can see here. And then either it starts a new trend higher or lower, but that structure repeats over time, and you may have, you've probably seen it. So I just simply, what I like to do is I like to have these moving averages here. I like to have that EMA cloud there, in order to help me sort of create a visual idea of where that moving resistance is, since those moving averages are moving. And then if it's aligned with a zone, like one of these zones on the indicator that I have here, then I sort of have talking about confluence, I have two tools here to identifying support. And then if my other requirements are met, then I'm looking to execute on that. But that's pretty much, I'm big on location, like you are as well. Location is the main sort of objective I have to execute these reversal trade ideas, similar to you. Like that was support what you bought. If I was on the computer on time, I probably would have joined you there. But yeah, hourly trend trader with a 2 or 5 minute entry setup to allow me to participate in the same trends that we all look to participate on.
Nice. What would be potentially first possible trade for you today? Right, we've retraced into that zone now. I see you do have a level there as well, but this is not a trade, or you wait for the open, or
No, it's at a zone that I'm looking to see if we can hold. It's the first area of support. Now I need to wait for my own rules for my entry setup to sort of pull me in. And I typically, like you have a reversal approach and a directional approach. For a reversal approach, we sort of need to, talking on the higher highs, higher lows structure. I am looking to, in a reversal higher, I am looking to wait until we get a lower low, lower high, lower low, because 80% of the time into that second or lower low or second higher high, the trend is typically over, and we typically either reverse from here or maybe there's like a final third lower low. And what I'm looking to do is I'm looking to get long the break of that last lower high, because in doing so, we confirm that price is now starting a higher high, higher low structure.
Right.
And I am looking to enter at the start of a new trend, which is at the break of the last lower high. And so those are my entry rules. And then I'm looking for my stop to be at the lows. And then I'm looking for my first partials to be 1.5 to 2R. And then I'll let the rest of the trade work out. So I get a lot of feedback on, oh, when am I moving my stop? When am I moving my stop on the stream? But
yeah. Well, look at mine right now. They're like,
So you're
bro,
looking
you're willing to give back, 35 points on this? I'm like, yeah, absolutely.
Yeah, you're looking to participate in trends. Like, the potential of those trends. And I see that you put on swings all the time. I'm the same way. I'm looking to participate in hourly trends that I can hopefully leverage into a multi-day swing if I have the right entry, if the daily time frame is sort of telling us, hey, we're breaking out of this 2-week range, let's continue higher. There's no reason then for me to exit my trade, because I'm looking to participate in that trend. That's how I see it.
Yeah.
So maybe we do hold here, and maybe we bounce back up into the open, which is in 5 minutes. So hopefully, watching that. If not, if I take a long here on this reversal, then maybe I get stopped out if it doesn't work out.
Definitely not. I'm not sure the highest time frames you go to, but for me, on like a daily bar chart, yearly VWAP type of chart, this is essentially an extended to the upside, worst possible place to put risk on, right? So as you were saying, markets are fractal in nature, and the further and further you go out, obviously all-time highs is not a pullback trade, is it, right? I was licking my chops and getting long back in April and trying to get swing long into May, and it just never gave a pullback to do so. I'm not sure if you experienced that or not, but this isn't like a long term, like a swing trade for me. This is, however, for those of you who've watched me on the stream for a long time, I've done a lot of scalping, a lot of real short-term order flow stuff. This is not that. This is an actual position trade that I'm looking to hold. I'm looking for more upside. But it's not like swing trade for me because of where we are on the highest of time frames.
Yeah, it makes sense. Market, I swing trade a lot as well. That was my first love in the markets. And it's been really choppy period for swings as well. But
unless you're in from the lows, and then there's nothing to do, right?
Yeah. So
it was a tough one to catch.
Yeah, it's I was lucky enough that I was able to swing some NQ over the last few months in certain spots.
Nice.
But
good for you.
It was definitely hard because of a lot of news, in the beginning in June. In June, it was really choppy due to news. So there were definitely, ways for people to get stopped out a lot. But I put on long here. I'm trying to see if we do bounce from this area. And I have my stop at the lows, and I have my first partial at 1.6R. We'll see if it holds. If not, so I only flip sides if we form acceptance, meaning that we start to consolidate here for a certain amount of time. We develop that wedge structure that I talked about. And if so, then that will sort of confirm to me for the approach that I follow that sellers are showing up and they are driving price lower. And then in that situation, then I might, if the tape was bearish and the higher times were telling me, yeah, the short has a more sustainable run, then I would participate in that. But, or, as you can probably, in your own trading, every time we break a support level, we just go to the next support level and we bounce. It's been such an incredible bullish market that I haven't really found the need to short much. Unless you may be shorting that at those highs, which I'm really not good at identifying a good high in an uptrend to short against.
Yeah, I get pretty granular with the scalping side of what I do, and being long, being short within the same hour or session or whatever is usually a kind of a non-factor based on how short term those views are.
Yeah.
I kind of compartmentalize those essentially three things, right? I have like NADRO intraday position trading, I have NADRO swing trading, and then I have scalping. That's very order flow heavy, very short term.
Yeah, that's but your scalpings are much longer than what other people consider scalping.
Scalping is a funny word in the trading community. Everybody has their own definition of what scalping is. Yeah, it's not a universal thing. But yeah, I'll take a scalp and I'll hold it for an hour, right? Which people would be like, that's not a scalp. So
yeah. So let's see if we can commit to the bounce here. Might be a choppy morning if we can't move much. Gotta check out my swings. Oh, and good morning to chat, and say hi to you guys this morning. From here, what are you looking to do if this starts to fail? Do you then look to get out of your trade, or do you look to, I don't want to say move stop, because there's really no reason to move stop unless your trade is invalidated, and at the moment there's really not much indicating that.
right. For me, it's all about the zone in which I got long from. This idea is not yet, for my definition of things, in an uptrend in which I can begin to then trail and demand that uptrend persist. This is a rotational play for this week. And so this is the lower extreme, which I'm long from. This was the upper extreme. And so it's rotational. So I expect there to be some back and forth. And so for me, the idea is not invalid unless we get back down here below my entry.
Right.
Now, if we start holding, like for example, if this area holds on the open here and we make a new high from there, that's probably going to become kind of my new line in the sand for trailing
new
the stop,
trades,
if you will.
Line in the sand for new trades, or just for trade management?
For trade management.
Okay. Now, one thing I'm really big on is context, and I would ask you, for myself and others, how do you view that? What does that mean to you, and what do you do with that, if you don't mind sharing?
Yeah, I mean, it's similar to kind of some of the stuff we've talked about or so far in terms of the specific tools I use to frame context. But to answer it generically, kind of the way it was asked, context to me is we have kind of certain frameworks and what we call laws of market dynamics, the way, if this, then that, like expectations that can come to be true if you have acceptance of something, and we look to trade what is within all this. So within that, having a framework for understanding, context gives us directional bias. It gives us, importantly, We don't just come in and say, yeah, I'm bullish and that's all there is to it.
Yeah.
It's if you're going to have a directional bias, there needs to be a line in the sand. There needs to be an area where that bias is invalidated. And then from that point, you could either have a flip in bias, depending on the context, or you could go into a no trade area where there's not clarity. You have bulls and bears competing in a zone. So to me, context is being able to see what the market is trying to accomplish at any given time, therefore having directional bias, being bullish, being bearish, and having lines in the sand, very specific areas where those ideas are invalidated and potentially new opportunity is then presented.
That's you guys
get
should all
scaled?
save that.
Did you get scaled out of some?
No, I got stopped out.
You're kidding me.
No, I had
Oh,
my stop at
ES
the
didn't
lows.
make a new low, and I look at your screen. NQ did. Wow.
Yeah.
I was just watching it rip higher on ES, and I was like, oh, yeah, he's getting scaled while I'm ranting here about context. Dang.
And you know, based on my rules, there was no entry again for me to get back in there. So I have to respect that, as you know.
Yep. It's the way it goes sometimes for all of us.
Yeah, so at least, you know, we're defending this first area of support that I had shared. From here, if now we can, I mean, I'm still looking for any all-time highs as long as this area can hold. So there's really, you know, a lot of people have FOMO and like, oh no, I'm missing a move. Gosh, there's so many traits that happen during the week, during the month, that you just have to wait for your entry-based setup to show up again and then execute. You know, you talk about that you're in a drawdown. You know, look at how you probably were trading back when you started trading and you were at your drawdown. You were more emotional. You had less mental clarity. You wanted to make back the money that you had lost. You probably took profits much earlier because you were like, no, I need to recover
I actually did
my
the
drawdown.
opposite. I would try for home runs to try to make back the drawdown.
Oh, you were doing that? Okay.
Yeah. But your
And then maybe
point remains.
then
You're
that would've
absolutely
cost you to
correct
lose
that you
more.
alter what you're doing. You get away from process in order to try to, because of your P&L essentially and where you are with that, which is a big no-no.
Yeah.
No, I always say that true confidence in trading comes from knowing you can handle the worst. A lot of people think that they're going to get trading confidence when they just start having more winning trades and they see the upside of things. I disagree. We all know that even a beginner trader could come in and have a big period of success, and that would be some major false confidence. True confidence comes from knowing you can come out of drawdowns. You can handle that. You can not have your best version of yourself, and you can still, again, I'm really liking what I'm reading from Jared Tendler. I've never met him or spoken with him, but that kind of A game, B game, C game, right? You can know that you've tightened up your C game, you know, that type of thing. I just really resonate with that. And yeah, that's where confidence comes from in trading.
Yeah, I agree. You know what you're capable of, and that adds a new layer of trading experience to your belt that you can just take that moving forward. So what are you looking for targets here? Do you have those in mind?
No, it's more of let's squeeze as much as we can out of this and wait for the market to kind of take us out again if we get into an uptrend, which we're certainly trying to do here. Again, in terms of actual order flow, there is more selling from this current high that we've now kind of made, this little up rotation here after the open. There's more selling on the tape. If you look at this cumulative delta, how hard the sellers slammed it. You know, I'm just watching for those signals. That's not something I'm going to make a knee-jerk reaction to, that short term of a signal, but I'm always aware of the strength of buyers and sellers and how that's progressing. And I love the way that you see markets when you talked about like even your intraday, you're not, well, it's all intraday, but your execution model and whatnot. You actually spoke about it in terms of what I call rotations, right? Like if you were to slap on a zigzag indicator, right, to a chart. I love viewing markets through almost the most granular unit as rotations.
Yeah.
Instead of people get really, really fixated on single candles or the last two candles and a candlestick pattern of those two. That is so myopic, so granular. I'm not saying that it can't be useful, that no one can make it work. But for me, a big thing, and this is why I have my charts look the way they do, is because I got militant about it. I think that candles are prettier. I think that your charts are sexier than mine. I think they look better. But for me, I like to scrunch it up and make it those high-low close candles so that I'm forced to not see the noise of candle to candle movement, and I'm forced to see rotation to rotation. So it's me forcing the chart layout to only help me be better and only see the things that I think are best to see to be at my best performance. Because I'm as susceptible as everyone to get too sucked into individual candles and things like that. So I change things to give myself some training wheels.
Yeah, that's good. Good advice for everybody. You have to do whatever you can to make sure that you initially and through the long run provide those guardrails to keep you aligned with your goals and help you get there.
You said earlier you're a very visual person, right? And in that way in your trading, I'm the exact same way. When when Pax or anybody, Pax in particular, because he spouts out a lot of numbers. That's the way his mind works. He remembers the numbers, and that my mind goes blank when he starts saying those things. I literally am not. I don't have that type of intelligence to follow him when he starts saying numbers. My mind goes into a blank. But if you paint me a picture, if you draw me a diagram, if you do those type things, I'm really, really good at remembering those type of visual patterns and that type of stuff. I almost never talk about numbers. I talk about references, right? This value area, this zone, this confluence. Because I suck at numbers.
Yeah, no, I'm the same way. He's talking numbers back and forth. It's like, okay, where in the chart was that? Like, what was the reference? What was happening in that moment in time to help me put those two together?
Yeah.
So speaking on structure here, we held that support area that I was talking about. I'm now looking to see, so that, what I tried on was a reversal setup, reversal model, whatever people want to call it. Now I'm looking to see if we can consolidate up here to show that we are holding this 740 area. And then I'll look to put on, which is a wedge structure. I mean, it's very basic, right? You hear wedges, you hear high highs, high lows. It's very basic, but I'm just, in my eyes, I'm viewing and I'm following the market structure because it's either a high low structure, or we enter a corrective structure, and that correction is where we live inside the last swing high point, the last swing low, and we're creating lower highs, higher lows inside that until we contract enough and then start a new trend. So I'm this is where I'm okay being called a trend follower, right? I know in middle school or high school we never liked that, but call me a trend follower all you want. So that structure, if we can consolidate up here, create some sort of wedge structure, it'll sort of confirm to me that we are forming acceptance above the zone, and that can set up a new trend into all-time highs if we get it. If not, then we'll probably test 730, 740s again, and then maybe at that point it can be a little bit more vulnerable and maybe more downside. But at the moment, not really seeing that.
I think I heard you say that word earlier. I think when you were talking to Crudele, kind of with your morning plan, you used the term acceptance. And acceptance comes from, I'm not saying that's where it comes from for you, but for us, NADRO, NADRO, they're all acronyms for thing. The A is acceptance.
Yeah.
So acceptance is a very, very important thing for the way I trade. I think that when I first started trading, for the first couple of years, I would get chopped up or above and below a level, right? It's like, oh, it's breaking out. Oh, no, it's not. It's failing. Let's flip to short, that whole type
Yep.
of thing. And
Yep.
so for me, I came up with this concept. It's one, like I didn't create market profile. I didn't create long-term VWAPs, but I did create the concept of acceptance where, again, I'm not saying you do the same thing. I labeled that word, but the word for me, there's two ways to read acceptance. One is either a rotation, right? Not a candle. A rotation is far enough beyond a level, right? Let's say 75% of the rotation occurs above a reference. Well, we are accepting above that reference. If only 10% of a rotation is above the reference, we're still accepting below that reference, right?
Yeah.
Or time. We only get that 10% above an area, but then we go sideways for many, many, many bars, right? A lot of selling hitting the tape here. I'm not sure what's going on.
I think someone's supposed to speak in a bit. Maybe started.
That was quite the rug pull.
Who's speaking? Another test of that area.
Mm-hmm. It's the Globex session VWAP as well.
If we can hold here again, then we can move back up. But if we start to, going back to acceptance, we start holding this sort of consolidation down here, then to me, it's price structure telling me that, hey, it's ready to go lower. So that's what I'm watching for here, guys, is if we can hold down here and create some sort of wedge, then that can indicate price, buyers are vulnerable, sellers are maybe showing up, they're moving, they showed up here, they're showing up here again, and if we can't bounce from here again, then they're coming down lower to show up here, and then at that point we can start a new downtrend to here. So it's just a waiting game.
Do you have a higher
I wait a
time
lot.
frame moving average cloud that dictates you'll only look for an aligned moving average cloud on a lower time frame or trading time frame?
Say the first part again.
So like I know you have I think a 4-hour or something that you kind of do similar work on. My question is, does the trend direction or something on that higher time frame dictate long only or short only kind of looking for things on the lower time frame for you?
Yes, and I'll tell you why. If on the larger time frame, on the 4-hour, for example, we've had that uptrend, right, which is that 90-MA uptrend, and we pulled back into support, then, and which is where we are right now. We had this overnight consolidation, which looked like this on the 4-hour, and then we recently just broke out. So on the 4-hour, we're starting a new uptrend from that overnight consolidation, and until it fails, well, I should say, the structure that it should form now is a higher high, higher low structure on the 4-hour time frame to move up higher. If it fails, then it can obviously, we get a failed breakout and we reverse back down. But we don't have any confirmation of that yet. So at the moment, the data is telling me that, hey, we've broken out of this consolidation. We're currently consolidating above it. I'm then looking to do, if this is that 4-hour pullback here, I'm looking to enter on the 2 or 5 minute inside that larger time frame pullback with my reversal entry model or my bullish directional model inside that larger pullback, and then participate back again in that 4-hour trend higher with a 2 or 5 minute entry, and I get to participate in that. So over time, I'm looking to have a very small risk to then leverage a multi-hour trend and do that over time.
Cool.
And that's pretty much what's happening here. We sort of consolidating. If we can, it looks like we might fail here. How's ES doing? ES is now making a new low.
Mm-hmm.
So I pretty much have to wait for data to sort of tell me, hey, this is now what may be happening for the next hour, and then I'm aligning with that. I don't take that many trades. I take 1 to 3 trades a day, in A+ locations, which is combining that larger time frame support with one of these zones that I have here, and then waiting for my trade. If it doesn't happen, then I just have to wait.
Nice. I think
Pretty weak here.
yeah. Again, no uptrend definition for my charts. So a lot of this back and forth in this area is kind of to be expected.
Yeah, we're still in that range.
Mm-hmm. Oh, I forgot what I was going to say. Oh, I tend to view trader development as a it'll sound simple at first, but not all traders need the same thing. Like, in terms of, let's say you were going to learn how to play tennis. Well, should we talk about advanced strategy on day one? Should we talk about your mental game on day one? We could touch on mental game. We could touch on it, but probably it's not important. Advanced tactics are probably not important because you don't know how to hold the racket, right? So we have to start by teaching the basics, the simple, do those things very well. And I think traders miss that. I think, I took chess lessons for a while, and I had to literally memorize openings, memorize, different things, learn in-game tactics, Xing Zhuan or whatever that thing's called, like all these different things. You have to learn those things, and then you can build from there. I feel like traders as a whole just try to go straight to CPT land, straight to the most sophisticated way that they can possibly trade, all these type things. And the reason that I brought that up is because listening to you talk about your trading, you have a very structured way of doing things. And I think that is a really good way to begin as a trader before you potentially layer in more discretion, or whether you call some of that intuition or whatever that is. You got to earn the right to do that. And you got to learn how to hold that racket first. And the more structured you can be in your approach, the better your chances are of at least surviving and potentially even thriving earlier are going to be.
Yeah. I have a systematic background, so I'm very rules-based from the swing trading side that I've done.
What were you in terms of career? Well, like a software engineer or something like that, or?
No, I joined the industry when I was right out of college, became a financial advisor, financial planner.
Okay, I did some of that too.
Yeah, investment management, and then that evolved over time. Things I can't really share here, I can share in person. But my background is swing trading, and day trading came about from seeing that the same approach that I talk about, I applied on swing trading. I'm looking to participate in daily trends or weekly, multi-week, multi-month trends, with maybe like a 4-hour or a daily entry. It's the same thing here. I saw that price action was moving the same and really respecting the structure really well. So as we know, swing trading, it's not always, the market's not always going up. So I wanted to make some cash during downtrends. And that's what pulled me into the futures.
Okay, nice. So you studied finance in college and
yeah,
whatnot, if you went to college. Okay, yeah.
And then I don't know if you read Dr. Van Tharp's books.
I have at least skimmed all of them. Yes.
Yeah, that he pretty much turned things around for me and allowed me to really put together a system that can help me grow accounts. And so it's very structured what I do. I just continue doing that, and we'll probably continue doing that. I do like what you and the order flow guys look at. You know, I like looking at that. I feel like the internals are really important, and seeing you guys focus on that and see, you know, maybe a delta flip or seeing some big orders on the tape, like it may influence you guys in certain ways and help you guys see something better. Like when you guys buy a certain low, like you guys have confidence in that low, while I am still waiting for my entry rules to be met into that low, which it's still successful, but you know, the trader in me and from a risk rewards perspective, like, oh, I can find the better entry with less risk, more size in the same sort of value area that I'm looking, you know, location I'm looking to engage in. That's always interesting to me.
Yeah, it's I think that people can absolutely, and we see that, right? Yourself, Kane, you don't use order flow in the strict sense of what order flow really is. You don't have to. You certainly don't. It's a choice. It's a niche. I think the shorter term you trade, the more it makes sense to get aligned with that, to be in tune with what's going on there. And the further you move towards swing trading, the further you move towards multi-hour holds and you know, a lot of those type things, then order flow can become irrelevant. You know, order flow is like looking at trying to think of an analogy. I don't have a good one in mind, but like it's like getting down. If you're on a trip, it's like getting down on the road and assessing the concrete or the asphalt. You know what I mean? It's like, well, if you're driving in a big old Hummer, you don't really need to know because the pothole's not going to bother you, right? If you're on a bicycle, that's a little different. Potholes can wreck you on a bike. So maybe that's a decent analogy. But so the tools you use, they need to be attuned with the strategy, the time frames, everything, right? So order flow is not for everybody, for sure.
Yeah, it's great though. I like what you guys are doing and what you guys are looking at. All right, so NQ back tested this breakout area from the morning. That was my next area of support. ES is, you know, a little bit stronger, holding much better than NQ. Seen some tech names pull back. Software really taking a beating.
Here's the sellers again. For me, in being in kind of this middle third, if you will, of the intraday developing value is just in fact, if I were to draw on my screen here, there we go. If we were to highlight this kind of middle third zone, right? Guess where all the chop has happened, right?
Yeah.
So that's why it's not a place where I can comfortably add. It's not a place where I like to frequently initiate risk from. And so for me, nothing has really changed. Again, if we could have gone from here and pressed new highs and pulled back and held and started to go, well, then my stop could come all the way up in that region and I could start to trail it as this thing went. But it just there's been no uptrend other than, you know, this is like an impulsive big thing. You gotta kind of wait to see how it shakes out, see what the sellers have. And as I keep pointing out, the sellers were strong. The sellers were strong when we got to this high. Oh my goodness, the sellers were ridiculously strong. In fact, the sellers are now what I would call in control, right? If you want to talk about lower lows and lower highs, right? That's kind of what we're seeing here. So
yeah,
I used to be all about the higher highs, higher lows, lower highs, that type stuff.
it's great. It's I love it. Not much of a reaction from buyers. We still keep rotating lower. but we're back into that breakout area in NQ from that overnight consolidation. If we don't hold here, then we'll probably move down to 580s, 590s.
Yeah, kind of in at least in the S&P, it's almost like a triple bottom, near those
6390s,
lows.
yeah.
Yeah. So yeah, I totally agree. If on ES, if we can't hold this kind of like 6400 to 6407 type of area, then look out at those lows for sure. So it'll be a discretionary call on my end, whether if that starts to happen, whether I kind of scratch it out around my entry, whether I leave the stop, it'll depend on what the order flow is doing. A lot of times for me, order flow doesn't dictate the trades I'm taking. It's a tiebreaker for some gray area decisions. Should I scratch this or should I hang on? Those type of decisions.
So let me ask you this. Typically when we see these aggressive pullbacks into support, like I would say that 90s area in ES is support, all pullbacks into it have been met with reversals. And then adding on to acceptance, acceptance to me is, you touched on this, is when we move into an area of value, and back in the day, I mean, you and I were both buying and selling, or going long, going short at this sort of value area that we didn't really have a really good awareness of, and we would get stopped out as price just wouldn't consolidate in that support area, and then later on have its reversal of higher or lower. When we typically move into an area like that, and we're extended from highs, for example, and we've sort of been going lower for the last maybe hour or so, we typically see a reversal in an uptrend, right? We typically see a reversal after coming into support, maybe a failed breakdown of these maybe overnight lows or prior day low, or whatever structure is there, and then we reverse back up. I mean, we saw this a lot in, I would say, June, July, where we're just going straight up. I think it was July, we were going straight up. Right at the open, we could come down to maybe overnight lows, London lows, take those out and reverse back up, right? So I'm just talking about that specific structure, since we're technically still in that sort of environment. When we get into a support area like that, and you have your stop there and your entry there, what do you talked about order flow, but knowing that structure is there, does the order flow take more weight in your decision making, or do you wait to see if, hey, we've come down a lot from, maybe NQ that's 150 points. There's a probably high probability that we're going to reverse back up and bounce. And then if that holds, continue higher. Obviously, the tape is different for today, but what do you look to do in that sort of environment and area?
Depends on what's, I have a couple different styles, but I'll speak from kind of a standard NADRO style. The most important thing are the rotations. I'm a pullback trader. I need to see a counter rotation. I need to see a down leg if I'm stalking long, right? I need to see a nice up leg if I'm stalking short. And then I need to see a momentum shift, right? So like right here at the literal hard right edge of my chart is like a perfect long entry in that regard. We've rotated down and we get just enough buying. And I don't mean on the tape because they haven't been there on the tape, but in terms of price momentum shift, we get just enough, right? To where those are like bread and butter type of entries for me. And very, very importantly is, where is that rhythm rotation occurring on this intraday developing value VWAP framework? So
I see.
Yeah, so that's the most important stuff. Order flow, again, if I have a really, really A+ contextual setup, I will ignore order flow and take the momentum shifts and be aggressive. If there's something I don't like about the trade, I'm concerned about potential for stop run lower as I'm stalking long, things like that, the order flow will dictate whether I'm willing to put that risk on at that time or not.
Good, thanks. Good lesson, hopefully, for everybody, and thanks for sharing that. It's really important to have a visual of what someone like Merritt is looking at, to help you guys get better. ES is holding, it's moving back up.
Yeah, it's a chop fest here, but it's at least, I think of kind of scalping this and whatnot. At least there's some decent rotations. At least it's moving. It's not just like up bar, down bar, chop overlap. So at least there's some decent flow to it. Chat and Chris, I'm unaware of how familiar you might be with my trading and stuff, but I know chat, you guys are a lot of my students and different things like that. I haven't seen anyone ask yet. I haven't traded the S&P 500 in years. No one has said, "What in the world are you doing, Merritt? Why? Where's the NQ?" And so just to let everybody know, let our community know and things like that, I have spoken to like desk traders about this so far. I've spoken to some AGM students about this so far. I am simply seeing some things that I like better in the S&P. I'm not going to get into all the details here publicly, but I'm seeing S&P just a little more conducive, a little more straightforward in some ways. And so I've traded, when it comes to scalping US indices, when it comes to kind of like day-to-day, like what I'm really looking at, it's been NQ for a couple years now. And Friday was the first day I went back to the ES. So that's where I'm at right now. Subject to change at any moment, but I'm just seeing things. Markets evolve over time. There's different things that happen. So that's where I'm at. I'm still doing my normal multi-market. I look at a dozen or so markets and things like that.
You trade everything, huh?
When volatility's high, I will just absolutely hone in on the day-to-day scalping with typically a US index, such as NQ or ES. When volatility's back in kind of more normal or boring areas, which it has been lately, I will prep in the morning and look at multiple markets and kind of pick and choose where I like the context the best, and then go look to kind of deploy risk there and apply my execution model and whatnot, just like you do.
Good. So I see a potential long here. I'm looking to see if we can hold. I mean, ES can't break that 64.18 area, holding really well.
So help me understand. It's below the cloud, right? So you don't always need it to be a pullback into the cloud.
Yes, you don't, because it's what happens here is one second, let me see if I.
Yeah, don't let me distract you if you're stalking. We can talk about it later. We need like a safe word or something, like pineapple. Pineapple. Give me a second here, bro. Who asked that? Kai. I tend to keep ES around 3,000 volume is kind of what I'm focused on intraday. I've got it a little bit shorter right here with a 1,000. I could flip it over.
All right, I got long NQ. ES is the leader though. Probably was better to get long that. But like I hardly trade ES. So going back into my entry rules, we had that second lower low.
I love that entry, by the way. I wish it just wasn't quite low enough for me to get an ad on right there, but I really love the entry. It's got a lot of elements of good Nadro type stuff. But please continue.
So which that's great. I like that. I really like the Nadro stuff. It's really, again, it's providing structure to what you're doing to rely on that will help you become a better trader. But for my entry rules, we moved back into that next support area. ES back tested as well. So I'm sort of providing my thesis, how I look at it. ES back tested support, which is that overnight breakout. NQ as well, but it did move a little bit deeper than that exact 660s area. So it can still fail in my eyes. But on the 2-minute, we had a lower low, lower high, second lower low, which again, per my process, it usually indicates that 80% of the trend in this specific move here is over. If we do get a third lower low, then what would have happened is we push up into the 9 MA, reject, and then make that third and last final low. This is typically where you have your RSA divergences, maybe a delta divergence in there. And it's really, I call it the final low or the climax low or climax top, because it's most of the time the failed breakouts, failed breakdowns at the end of trends are into that third lower low. And so my entry tells me to get in at the reclaim of that second lower high, lower low, lower high, lower low, lower high into the 9 MA, because when that is reclaimed, we start a new uptrend. What's not new, a trend that's up, because we've reclaimed the last lower high, and we should now create a higher high, higher low, higher high structure into the next area of interest. So
where did we reclaim the last lower high?
Above the 2-minute candle high at my 706, which is 1006. So it's
so you look on that on a very granular candle by candle basis, as opposed to a rotation swing high, swing low basis. Okay. Now
because for my systematic background in swing trading, I would have to get long or short at the break of the next daily's candle high.
Mm-hmm.
So I do that for the 2-minute or 5-minute whenever I'm looking for an entry.
Gotcha.
If it doesn't, because look, if it doesn't take out that last lower high, then technically we haven't started an uptrend against that trend, right? So that's where I'm looking to engage in and answer. And then from here, what I look to do is, okay, well, the downtrend ended. Now I'm looking to see if we can create some sort of wedge structure, which is that consolidation, that correction sideways. If we can and hold, then we can start a new uptrend higher. If it doesn't work out and we are not to hold the support area that we just tested, then we are probably going to move into a new low and move in deeper. But now it's just a waiting game for me.
Right now, I have this strong desire to flatten out of this trade. And what I'm doing internally is trying to figure out, does that come from a place of my patience has gotten a little exhausted, or does it come from a better place, which is more market generated information? And the reality is that nothing has changed in this trade. I think that impulse came to me from more of a, I'm getting tired of waiting on this position to work more. I certainly see that intraday, right? I would rather be, look, if we're gonna remain rotational the rest of the day and potentially even run stops lower and things like that, then it makes sense to kind of flatten out or whatnot. But I have to remind myself, I've already scaled out of this trade. This is a core with a specific job description, and that nothing has actually changed in this. So anyways, just talking out loud a little bit there, because I think it's important to note that sometimes for people, again, they look at some of these people they look up to on this stream and things like that. My students look up to me, things like that. And it's easy for them to get a sense that like we've got it figured out and we don't have an impulse to do the wrong thing, right?
Yeah.
And that's not true for me. And I think that's not true for most traders, for most anyone. We're always going to be human. We're always going to have impulses, thoughts, reactions to do things, which can come from places of fear or greed or all these kind of things, like Whit is saying in the chat there. So the thing that you want to model that I just did, and I'm trying to model for you, is think about your thinking. Filter that. It might be a fantastic idea to flatten the trade. But think about it. Don't just react from a place that I used to trade from, which is what I call autopilot mode. There's an impulse, it just goes straight to the mouse. Doesn't matter. That's not a good way to trade. Impulse, self-awareness, filter it through a process, and then make a good decision, despite the emotion, despite the feeling. That's the model, guys.
Yep. Agreed.
I think zigzag can be useful. I'm going to try to say the name. Let's see.
What is zigzag? What does he mean by that?
You're going to have to help us in English characters. Let's
Oh,
so
you
we
can
can
read
say the
that?
name. I'm just really interested. Bhutan. I don't know how to say it. Cherobunion. That's a tough one for me. But that person with the purple B, is zigzag useful? I think it's useful as a learning tool. I think it's less useful as an ongoing tool. So what is zigzag? Zigzag is simply you apply some form of math to determining what is the definition mathematically of a swing high and a swing low. And then it just simply, there we go. It's Vitali. Perfect. It draws lines from swing highs to swing lows, kind of like Chris does, like on his margin space over on the right, and as he like thinks through his potential trades and stuff. So it can start to train your eyes to see things. And I kind of disagree with some stuff in the chat. I don't think it's about necessarily strength or ratio or all these kind of things. You feel free to dive into some of those things, but it's about simply looking at swing highs and swing lows and seeing the market from a perspective of rotations rather than just candles. It's really, and it's just applying some math. I think that the human mind is typically more flexible and more powerful than a lot of the math a lot of times. So it's good to kind of graduate from zigzag to kind of seeing it with your own eyes. But zigzag is a great thing to slap on charts. I do it in our Nadro course. I force people to put zigzag on and use it and look at it and see how kind of there's shifts with it, and to see where rotations are occurring. I just think it's very powerful. So anyways, it's a cool rhythm tool, as Ralph is saying. It trains the eyes to see rhythm. I couldn't have said it better myself.
The only thing I would add to that is be mindful of what those zigzags are versus the actual trend of the market.
That's
Not
right.
all zigzags represent the trend structure really well. If you're focusing on trend structure like I am, right, which is the higher highs, higher lows, lower lows,
Right.
people will say, oh, here's a higher high, higher low. But the original trend where that initial higher high was ended, structure developed otherwise, and then you have a new higher high. Well, that's a different trend. And people may not really see that clearly, and follow certain trend structure rules that may not be helpful for the zigzag, but it is for the higher high, higher low for a specific trend, or the opposite.
Absolutely. And I think that's important for the chat and everybody listening, is that, Chris and I have different definitions of trend, different ways of measuring it, defining it at any given moment. We look at different time frames to whether we care about what the trend is or where. And that's awesome. That's cool. That's interesting. That's making a market, What's important for you guys at home is to have those definitions for yourself, right? Have those definitions, know what time frames they come from, what the job description is of each chart that you have in your chart book, and try to apply it consistently and try to use best practices to, whether you're trying to fade a trend or align with a trend, it doesn't matter. It all works. And it all doesn't work, right? It's all, random environment in a big way. We're just trying to apply filters and frameworks and things to, for me, it's all about risk reward asymmetry. That's what it's all about for me. I don't really, I think of if a trade's going to work or not, like flipping a coin, you know, and with the coin slightly weighted against me, actually, I'm more of like a 40s win percent type of guy. But I know that I get really good risk reward in my favor when I'm trading well, when I'm trading from good trade locations and things like that.
Yep. It's always location. Location is super important.
Do you
So
have
I
a way
almost,
of defining no trend? Is that a thing for you? I haven't heard you say that yet.
it is. No trend is when we, let me share you know what? I actually have these, let me share this. So price hit, while I'm looking for this, price almost hit 1R for me. I have my first partial set at 1R just because of this choppy tape. Maybe it does hit and I get half out. If not, we'll
Doesn't
see
look
what
like a
happens.
great high. Looks, I would say the odds are in your favor.
Yeah. So let me share this. And this is from you know, what I've done over the years on Notion is create a library of different variations of my model, of my setup, to understand what a successful breakout looks like, what a successful consolidation, what does it look
Love
like when it
this.
fails, what does it look like
Love
when
this.
there's follow through, right? Like different scenarios and variations I wanted to understand as much as possible. So what I've done
That's putting
over
in
the
the work,
years,
guys. That's putting in the work. What he's talking about right now is make it or break it type stuff.
yeah. So I've created, you know, hundreds of sheets, a library, so I can rewatch that film, like in football, and you know, just how Tom Brady says in an interview that he's before the Super Bowl or whatever for like a whole month straight, like every weekend, Friday to Sunday, he's just watching film on that opposing team, so he understands every decision that they're making. So on game time, nothing's new. He's already know what they're doing, and he can act on that. Think very little because he's just executing on what he's seeing in real time. That's what I wanted to develop. So I created all these different things, but let me show this. So this is the structure that I'm talking about. And these are drawings, and then I do, you know, screenshots and stuff like that. But this is and this is all time frames. Oh, target failed. All right, I got half off at 1R, and I'll keep the rest on and see what happens. But this is, you know, that typical trend higher. When it ends, we revert back into that 2050 EMA cloud that I talked about. This is a no trend in time, a consolidation inside the swing high and swing low. We're creating energy for that new 9MA trend.
Right.
So here's how, you know, a successful breakout looks like. Then a reversal at the bottom.
But that's no trend within a trend, though, right?
Yes. So it's a resting period for energy to build back up to then create a new trend. Like this consolidation here on a larger time frame is that. So let me find it. Here, let me share the hourly and NQ. Hourly is really good at that, at showing us that. So I have my scenarios here, but you can see the structure repeats over and over again. And this is, I'll go from here, but you had your higher high, higher low, higher high, higher low, higher high. It ended. What did price do? Reverted back into that cloud support, created a wedge. Instead of coming back down again here, it created a tight wedge, and then a new breakout, a new uptrend. And then it ended, created another wedge, failed breakout, downtrend. What happened when that downtrend hit support? We reversed back up, created another wedge, uptrend. We're now in a higher high, higher low. Very wild, very deep candles one way and the other, but that's a higher high, higher low. So that structure will repeat over and over again. And these consolidation periods, there's no trend. The 9MA is flat. There's no trend along a rising or downward 9MA. We're contracting. We're resting before a new 9MA in yellow trend, which is what we're seeing now. And the entry here that I put on was the idea that we were pulling back in that higher low on the larger time frame. And the 2-minute was my entry to participate then in the reversal back up in that higher time frame.
I love it. I think a lot of people don't grasp what you grasp, which is the pairing, right? The excellent use of multiple time frames to do both trend following and mean reversion simultaneously in order to amplify risk reward and do all the things that we love about timing up trades to align us with context. And I think you do a really nice job of that.
Thank you. But you know, just like you, we have to show up and do it again over and over again.
Sure.
And the success and the vision that we all see ourselves as becoming this trader, it's really it takes a lot of work, a lot of time in the years, and then the next work is just showing up and doing that, regardless of how you feel. Eventually, you build that emotional tolerance to say, you know, like for example, I saw on Twitter or X yesterday a lot of people having red days and a lot of people going on tilt. Why is it that so many go on tilt when there's a day like yesterday? And why is it that they feel so bad and some disgusted with themselves? Right? It's really, they're still missing part of the work that will enable them to understand that, hey, it was just not that day. I took my stops. Cool. Let's do it again tomorrow. Right. But there's just maybe they're not thinking long term. They're not doing the work necessary to understand, hey, this is one trade out of 1,000 trades. The outcome of this doesn't really matter. What can I do to get better from this specific day? Did I not have a good understanding of this day? What was the structure like? What was context? Right.
Yes and no. So I think you can't. There's not always lessons to be learned from a losing day. There's not. A lot of times a losing day was a great A+ day for you and you did everything fantastically. I think what a lot of people, I think the core of what we're talking about here is, in order to be a winner, first you must become a great loser. If you're not a great loser as a trader, you will never, ever, ever be a winner.
Yeah.
I think that's the foundation of that, you know, in my mind.
Yeah, I agree. They a lot of more learning to learn the losses and know what, I mean, you need losses, right? The losses are part of the strategy. You can't make the money you want if you're not taking losses.
I used to, every single trade I put on, I expected, I demanded that I would be right, that the market would validate my self-worth or not. That's how I started out trading for the first couple of years. So when I give this advice, when I say these things, it's not coming to you from a place of, I've got it all figured out and you guys don't. It's coming from a place of, I've been there, I understand, I have not only helped myself through that, but other traders on the desk. It's something that I know very well and can relate to.
Yeah.
Sellers not showing up from the high yet this time. So every time we've gotten to this high, we've seen just these strong sellers that I'm talking about. They haven't shown up yet. Doesn't mean they're not going to show up. I'm just talking about the hard right edge, what I see right now. It's not good for bears that this is the third time we're up here kind of knocking on the door of the highs. That's not doesn't bode well for shorts. They're kind of, who's vulnerable right now? It's the shorts at the highs. It's people who are holding those positions with stops above there. So would be nice if we could get a little stop run through that area. That might be a spot where I get pretty in tune with the order flow and see if I need to make a decision or not, whether I think that we could trend for the day. Again, for my definition, we've yet to do that. And so I'll be very interested to see what happens. I'll be interested to see if we get a nice up rotation. As I like to say, I'm long, we just got an up rotation. What do the sellers have? That will be the decision point for me, is what do the sellers have? Are they super strong again? I might cut this position. I might just take it off on strength into the highs or on a retracement short term if I think the sellers are continuing to kind of step in from these highs and dominate.
Yeah, I agree with that. If we can hold up here, that'd be great. That would set us up for continuation.
Yeah. Certainly better to see the market as a comedian short life than as a adversary. Could be a helpful mental model for you.
Yeah, beliefs play a big part too. You know, Dr. Van Tharp talks about this a lot, and you have this. You know, we find and meet these traders who are constantly thinking that the market's too high, the economy doesn't represent that, or valuations, etc. If you have this belief that it's negative towards the market, well, you're not going to find much success in a bullish setup
Can't
or
trust it. Yeah.
strategy that looks for higher prices.
Yep. Yeah, I mean, I'm a big fan of Mark Douglas's work from like Trading in the Zone, and it's all about rewiring belief systems. And it's not that we can just like become these like Zen master perfect things. Like I was sharing with you guys earlier, I had an impulse to kind of like go outside of what I should. But if you do the work of rewiring some of these belief systems that we all show up to the trading world wrongly with as what I call a natural human trader. You show up wired wrong to trade well. If you rewire some of the belief systems, which takes a lot of work, it's not that you become perfect. It's that these wild emotions that used to show up, the self-worth, the crazy fear and greed, the just extreme stuff that is natural to deal with when you trade, that a lot of traders think you just have to figure out how to sweep it under the rug and like ignore it or whatever. If you rewire those belief systems, those things show up like 5% the strength of what they used to. That's the key. That's the ticket. You rewire the thinking, the belief systems about randomness and really what your job is as a trader to just mine expectancy over high sample size of trades, not do analysis, get winning trade next, right? Once you rewire those beliefs about to your core, what you think this is and what you think markets are, those emotions simply don't show up as strongly on average on the day-to-day. There's other things that happen. You can still end up going on tilt for reasons. There's all kinds of stuff. It's complex. But if there's any secret sauce to trading mentality, it's rewiring those belief systems, I think.
Yep. Struggling a bit up here again.
Yep.
Maybe it does remain a range-bound market.
Mm-hmm.
If we can hold above prior day high in ES, then I think that sets us up.
Cheers, Mark. Thank you. Y'all just smash those likes for us if you appreciate hanging out with us this morning.
Yeah, guys, like it up. 1,000 of you here, 340 likes. It's not a good ratio. Dr. Van Tharp, stream side, is that what you're asking for? I mean, all-time highs for NQ is just a rock throw away. We can get there.
Oh, there was a question I missed earlier. I wanted to ask them to clarify. Somebody, here it is. Merritt, I feel like I confluence jumping within the NADRO framework. Any tips? So you're going to have to, I don't know the term confluence jumping. So you'll have to help me understand that, then I'll be happy to help.
Yeah, what is that?
So I've got all kinds of like sell signals firing off. Sellers did come in, not to the extent that they did from the prior highs. So I've put my mouse over the flatten button a couple times here. I'm kind of waiting to see if they continue pressing. It's a good spot medium term to take the risk off from my position and where I've been, especially after giving it a chance a couple times to do more than what it's done. Still a great trade if we take it off here after rolling over from the highs.
I think you're holding much better here.
Yeah, it's definitely a little changing character.
Tech names are moving higher. Helping it. What are industrials doing?
I only want to trade when we are imbalanced. Then I flip again to take also traversal trades and so on. I would say you're not connecting with the prep work. CWPW. Connect with the prep work. If you're flipping every time there's an intraday imbalance, rotational, and going back and forth, you're not using that time frame for what it was designed to do. That time frame, the intraday chart that I'm sharing with you guys, it's not what generates the trade ideas. It's the execution chart. It's the timing chart. It's the stop placement chart, those type things. You need to come up with 3 really good hypos for each session based on the context, based on good lines in the sand. What's the market up to? Look for confluence higher time frame. And then your trading needs to line up with aligning yourself with those hypos. That will help you from jumping around every time something changes intraday. Job description for the chart. What's up, Kane?
Kane, what's up? Yeah, good job description for the chart. It's a good one.
Yeah, if you have an indicator or a chart or whatever that doesn't have a job description for your process, you need to get rid of it. It doesn't need to be there. Or you need to think more deeply about that chart or that indicator and what it signifies for your trading. I actually had a hard time with that for a while. I had these like pretty charts, like aesthetically, I really loved them. And I had to do it sounds immature, and maybe it is, but it was hard for me to let go of those. What do you want? You want to make money, or you want to have fun and be aesthetically pleased?
Yep. I saw a question here. Let me go back to it. How did you discover this setup where after it goes down 3 rotations and reclaims the 3rd rotation? I discovered this setup, or you discover any really thing on the chart by just spending enough screen time and annotating things.
Yeah,
I
those
noticed
hundreds of
that
pages
whenever
in his Notion book, that's how.
yeah, I noticed that whenever we would create a second lower low into a support area, we would reverse, and it started becoming more consistent. So I started, doing historical study and really trying to see, okay, well, yeah, it does look like after we come into that second lower low, maybe a third lower low, price will reverse back up. And we see that. And so, eventually you start identifying different parameters, your entry, your setup, maybe a trend filter where if we're above a certain level or a moving average or a Fibonacci, whatever you're looking at, then market's bullish. So you want to focus more on bullish setups if it were below it, right? So you look at things long enough, you annotate, you save, iterate, you start putting, things together, and eventually trading success is just being stuck in the right feedback loop. And you do it again and again and again and again, and until you're finding consistency in between your entries and your exits with a positive expectancy, make money and become more consistent, then you can size up.
We could talk for 6 hours about the things that you've said in the last 20 seconds. You guys pay close attention to what he's saying there. It's all very, very comes from a place of wisdom and understanding. Very, very strong stuff. Where are you located, Chris?
I'm in LA or California. LA to you might be Louisiana.
LA to me is lower Alabama, but yeah.
Oh, okay. Yeah, no, I'm in California and Los Angeles.
Nice.
Have you been out here?
I have never been to LA. No, sir.
No?
Mm-mm. I've done the quite a bit of the NorCal stuff, but I've never done any SoCal stuff. Definitely need to. It's obviously perfect weather and some great stuff.
Yeah. Very different from Alabama, that's for sure.
Sure. Okay, this getting a little real granular here for a moment. We haven't seen the selling that we've seen in the past. We put in this atrocious like 5 or 6 bars that all had the same low, and then we just barely wicked it, and now we kind of have some buyers coming in. I'm a little hopeful based on that, again, just very, very granular type view that we could try to make a run at these highs here. Worthless comment, but just noting the real short-term stuff.
From a trend structure perspective in ES, you can see we had 3 higher highs, higher lows, and now we're into that correction phase.
Okay.
So, I mean, it's a very tiny consolidation, but if you can hold this 60-40, 64-30 area, then this little 2-minute consolidation wedge that we have can break out higher, and then that can give you that new high.
Mm-hmm.
Just a wait and see moment, though. Yeah, Deli, we need a LA meetup. I know it's early for you guys. Plus, Vegas is just a rock throw away. So, just like all-time highs here. Not much to do here. Yeah, I think that's also a good thing to sort of know for everybody. You have to give price the ability to figure itself out as it sort of holds areas, doesn't hold, starts maybe a new trend. When you're in your trade and there's nothing that's invalidating your idea, your thesis for that day, and if structure supporting it, there's really not much to do. A lot of questions are you moving your stop, or where are you placing your stop? It's, to me, I don't see anything telling me that I need to move my stop up at the moment. We're just flat. Okay. Yeah, whichever. I don't mind. So ES is breaking that 2-minute wedge I talked about, that consolidation. So if it could continue to hold, it maybe starts a new trend higher and we get that new high. But action pretty flat here. Sounds good. To me, this looks like acceptance above 730s in NQ. ES is already leading that potential move higher. But well, from my view, on that 2-minute, we just need to see if there's follow through or not.
Here's the buyers. They are pressing. There is a passive seller absorbing them so far, so we'll keep an eye on that. Again, just granular information. Doesn't change the thesis, doesn't change anything other than the very, very short-term view of what's happening moment to moment, bar to bar. What was the over-under on Chris taking more trades than me today, guys? What was that over-under?
I thought you would be taking more trades than me, for sure.
Absolutely. Oh, I would have lost a lot of money on that bet. Like I posted over the weekend, guys, if you saw, it's a new, I'm turning over a new leaf in my trading. I got a little too loose, little too loosey-goosey, a little too frisky for Crudele. And I've had to, part of me in this drawdown, clamping down, getting back to doing the simple very well, getting back to better trades, a more refined process. So that's where I'm at right now. And you guys are seeing very, very, very different trading from me today than you've seen the past month on this stream.
So that's what recovering a drawdown means to you, less trading volume?
Not necessarily less volume. I think it ultimately will typically mean that, because I'll be taking less mediocre type trades and really honing in on what I know is working best for conditions and my trading in general. So yeah, it'll probably be a little less, but that's not kind of the intent. The intent is to give myself less discretion, give myself less freedom to kind of wing it and do some things that when I'm at my best, I can really, really do well with. I tend to go a little too far. I kind of go in cycles. I'll go too far with the looseness, the discretion, and I have to rein myself back in, get back to basics, get back to operating really well. And that's where I'm at right now in the cycle. The scalper in me wants to add to this position for just the stop run into the highs based on kind of what's unfolding here. And here it goes.
There it is. So we're seeing that follow through from a structure perspective from that wedge breakout, and now starting a new 90-minute trend. So it's just that cycle repeating over and over again. And see if NQ can follow. Cyclical is helping, yes. Now,
It is a slow motion stop run to the highs here, but no complaints. Have not seen any kind of capitulation on the tape yet. Just kind of meandering. I'm pretty comfortable saying that I'll be out of this position now. I could move the hard stop at this point. If we were to start to fail from this attempted run at the highs, at new highs, right? And if we start to see a bunch of selling, if we start to fall back into the developing value for the session, it's at this point where I feel like I could really lock in the trade and be done.
why is that? Because you think of a possible stop run taking place and then just reverting back down to the bottom of the range?
There's been a dynamic shift, as we've narrated, where we reached the highs for the third time and we have not found sellers. The price action changed. Look at how choppy bar to bar overlap this got. That's because it was just a little bit of a battle. There's still buyers around versus the sellers dominating like they did from the highs before. Now it forms a little flag pattern. We break it. Buyers are pressing. To me, this is the moment I can now identify where this trade is going to work. You know, I'm up 40 points on it, but it's going to work in a much bigger way here. At this moment, I can actually put my finger on it and say, it's now or never for me.
Okay. Makes
And
sense.
that's very different than earlier when I was like, oh, I kind of want to exit this trade and kind of thought about it. You know what I mean? When that whole type of conversation we had around that impulse.
Makes sense. Close to new highs here. Back to that 42, 43 area.
Strong buying, ES. Very strong. This
go.
is what I'm talking about, the capitulation. Stops getting ran. Moving my hard stop.
No, Aiden, I do not. I'm going to see if NQ can make this push to all-time highs here.
All right. I am flat. So we made that push. We released as much energy as I could see for that time period. Anything can happen from this moment forward. I don't care. But what we did do was in the ES was kind of couple tick the high, right? Instead of blowing through it and continuing to see that energy, what I'm seeing is we couple ticked the high and some sellers came in. Great trade. Milk.
Great job. Held that all day.
You guys have been sitting on that little soundbite for months, just waiting. Oh, man. See you, Emilio.
Emilio. I'm still gonna stay in mine, see if we have some follow through higher.
Yeah, yeah.
We're not be surprised if we do reject back down with that divergence. ES new highs and NQ. Not close to that yet.
Yeah, in terms of big picture potential, all-time highs, all that stuff is still very much on the table. For me, it just got to a moment where it's a pattern. It's a thing I've seen before. It's something where the lack of energy on the session, right? All these things start to shape like early in the trade, as you guys saw, it was what? Retracing 64.42, 64.08, right? What is that? 36 or 26 handles, whatever it is. And I was not batting an eye, right? But then there's a moment in time for me where I can identify something I've seen before. I can clamp down on the trade, and those expectations for what I need to see to stay in the trade change. So that's not for everybody. That requires us to be able to change on the fly like that can come with some major consequences if you're not in all the stuff we've talked about ad nauseum on this stream. Your emotional state, filtering impulses through actual market generated information and process, all these things make a big deal when it comes to making those type of decisions.
Yep. Great review, great session. Merritt, thanks for sharing a lot of the wisdom.
Yeah,
Hopefully
likewise,
a lot
man. It
of
was fun.
everybody in the chat can take something from it and apply it to their own trading and just get better.
Yes, sir. What's up, Jeff? It was great to meet you as well, brother. Yes, the over under. We ruined the sports book with the over under today on trade activity for sure.
Gentlemen.
The Stoker.
Good morning. How are we doing?
What's up? Look below. Good, man. How are you?
Oh, good. Very good. Market decided to be nice to me today, so that's
Were
good.
you long from the same spot I was?
I don't know. I don't think so.
Pre-CPI lows, that little low of session? No.
No. I did get long 64.12 on ES. I'm kind of been working this ES long all morning in the because I trade the Apteros tryout ES only, since that's how I separate those. So I've been working on
That's
that.
funny.
I got one left from 4:30. ES is looking a little happier than NQ is right now, but I also have some micros on NQ, just if we're going to continue a little higher. It feels happy, like it's going to keep trending here
Gonna
after we
party.
got. Yes, it feels
Party
like
City.
a party. So I don't know Party City, but I'll try to get back to. I'm trying to get my micros to 23,800 again, and then see if we get that IB high break, and then that'll probably be where I pause. But yeah, this account I kind of already hit my daily target in quite early, right off the open. So I'm being very selective with this one right now.
Nice.
Oh, sure. Yep. Let me show this. Hide the taskbar. There we go. Sweet. Yeah. How was streaming together, guys, for the first time? Was it awesome? What happened?
It was
Yeah,
it was
it was
as
great.
expected. It was great.
Cool.
It was
Of course.
the nature of the stream, maybe the chat agrees or disagrees, but the nature of the stream was like analytical deep dive into each other's thinking and processes, and as would be expected. So
That's cool.
yeah, it was cool. It was good.
I don't know
Very
if I've said this
educational.
out loud, but I do watch everybody else's stuff back at night if I don't catch it in the day.
Oh,
So,
really? Wow.
yeah.
Nice.
I go back through it. Yeah, my wife is a super big fan of me doing that.
Are you tucked in bed just watching us?
Yeah, sometimes, yes. Yep. Indeed. It's yeah, I don't know. It's a great show, so I love to catch up on it. So I'm excited to see you guys trade this for the first time. It's also cool. It serves as a good review for me too, sometimes, to go back through the mornings that I trade by myself and
Yeah.
then go back through the reps and see what other people were seeing there. So I've taken a lot of cues that way as well.
Man, that you're taking what I would describe as a really good benefit of being on a prop desk, which is other traders who know what they're doing, who you can get a sense of you can see their positions, you can get a real sense of their view, and we're all approachable. You could talk to us and you could say, hey, I noticed around 10:30 this morning, you were thinking this or seeing this. Tell me more about that. How did you do that? Man, that is like bringing benefits from being on a real prop desk to using NinjaTrader Stream to garner those benefits. That's really cool.
Yep.
And it's guys like you. I love guys who put in the work. Chris talked about the incredible documentation and all this Notion stuff he built out, like playbooking to really like figure out what the heck works and that type stuff. And to hear you then talk about, I'm reviewing film, I'm looking at what other people were able to do and see, and I'm learning and I'm getting better. And this is what it's all about, guys.
Yeah.
What it's all about.
No, I mean, that's the true benefit that streaming gave me, because I'd never done this. I'd never streamed in front of anybody before. And all of a sudden it was like, yeah, just like you said, like I've got tape now every day.
That's right.
So, and there's there's no hiding from live trading as we saw. Yesterday, I had to explain, I forget who I was explaining it to, but like one of the pitfalls of the way that I trade, I'll take a couple shots at what I think can be low a day. And, usually that ends up, you take 2 paper cuts and then you catch it. Sometimes you take the 3rd paper cut and you don't catch it. So there's also
absolutely
the truth of that part of that execution was on display yesterday. But I felt good about sharing that too. You can't
absolutely. It's
can't
real
just
stuff, man.
share the good stuff.
Fellas,
it happens.
I gotta hop off. Chris, great to meet you. Great hanging out. I mean, you've got a new fan here. I can't wait for next time.
Yeah,
So,
likewise.
Take care, brother.
Thanks so much for sharing everything.
Thanks,
Merritt.
brother.
Yeah, it was fun. See you, chat. Adios.
You have a good weekend. Or a good week. It's Tuesday.
It's only Tuesday. Yes. What's up, man? How are you?
I'm good. I'm good. How's you? Are you actually you traded ES, right? Which is I think a first that I've seen.
Yeah, yeah. I don't have it up on here, but yeah, for the because I'm still working through Merritt's tryout to see what his desk is all about. So I was on ES, and I do keep them both up at the same time on all my screens just to see. I like to see. We talk about divergence a lot, but when they're in sync, um, I still use volume candles just for feel for both of them, but they both have been very in sync all day. And we got a very good pullback to 6410, which was kind of an annoying spot from yesterday that was plaguing
Yeah.
me. So nice retest of that. Um, so yeah, so I got long there at 6412, and then I added along the way. Um, and that, yeah, now I'm just holding it. The interesting thing about them and how I use them with the balance areas that we have from Order Flow Labs, and like it's just market profile balance areas. You can draw them yourself too. But the top of the ES balance area is about 6450, and NQ has tested theirs and left it, which is around 23,750. So when NQ is leading as far as like price discovery outside of a balance area goes, that gives
Hmm.
me more confidence to continue to hold that ES long, and that there's still some upside potential here.
Right.
But yeah, I've got let me to scoot this over here so I don't flash my account numbers. Let me pull this. Yeah, so I have some micros on ES I can show that are still. I'm gonna change this stop because I trimmed too. Cool. But yeah, mostly I was adding with micros up here because I heard Merritt say it as I came on. He was looking for this aggressive spot to break, and this 760 spot was getting worked and worked and worked. Uh,
Yeah.
but we had broken out of that balance area spot I'd been watching, so yeah, so it felt like more upside was coming, and it did. So now we're just partying for this IB high break, get that stat in, and yeah,
Yeah. I'm hoping we can take out all-time highs here.
that's the name of the game. That's the best feeling ever.
Yeah, that's my main target today.
I think I saw. Oh yeah, my dude from yesterday was in here. Um, Chris, you should have met all these traders. It was awesome.
I know it sounds like a great time. I do wish I was there, but it's just
Dude,
I couldn't make that trip out during the week.
no, there's no way. I mean, it was an hour for me, so much different. I'm much luckier.
Oh, you drove up there?
No, no, no. I flew. It was an hour flight.
Okay, okay.
I almost drove. I was close because I'm terrified of flying, but yeah, I conquered it. So I feel good about that too.
It was a great time though.
Oh yeah, it was awesome. It was so cool to meet like people from the chat in real life, and yeah, just meeting Pax and Deli and Merritt and also Kane. But there we go.
Yeah, let's go.
Run it, baby. Um, yes, I got one left here.
Take us
Just a
higher.
micro.
Sing it.
It's only Tuesday. I can't be singing Creed already. That's great. This is why, for me, this is why it's so important not to get bogged down by, a bad day, and to try to. The Pirates had a good manager, a good skipper. His name was Clint Hurdle, and he's the one that kind of turned the Pittsburgh Pirates around and got us into the playoffs for the first time in like 25 years.
Can you
But
take
Oh,
me
boy.
higher?
there it is. Thank you. Thank you for saving me from having to actually sing that. But one thing that he always said is you have to shower well, which means after the game, if you lose, you got to shower and then it's over. That game's in the past. So I try to take that into my trading, and I was happy that I was able to shower well and come back trade well today because this was a good opportunity day.
So question on that.
Yeah.
What is it maybe that you're doing in your process to help you recover from that? Not really recover. I don't like saying recover because losses are part of our strategy, right? We need losses. We can have 10 losses in a row, right? The losses are going to happen, but
Yeah.
what has helped you over time to continue to show up the next day and execute as you need to?
I just have to take I'm lucky I have a good support system. So I'll tell my wife about it, and then I'll talk to my trader friends about it. Like I'll complain to Leo. Leo and I were trading together like for 4 hours yesterday, so we were in the same mix of stuff. I'll review it and make sure I didn't do anything outside of my process if I take a red day. And then just having that process in general and being able to check it against all of the setups, like to make sure, was I executing properly? Was I over my skis? Did I oversize? Was I tilting in anywhere? So I definitely go through that review process. And then once I've checked all those boxes, then, I just kind of try to forget that it ever happened. And yeah, I just I went for a walk with my kid when she got home from camp and just kind of spend some time in my own life outside of screen life, and that helps a lot for sure.
Yeah.
But I mean, we had a lot of my setups are just MGI related rotational stuff, and we had a bunch of outlier things happen yesterday that it just so happened I took the wrong side of a lot of those trades, but those are my setups. Like we had overnight high and overnight low break. That's weird. IB high and IB low broke. That's weird. The divergence was very strange between ES and NQ. So yeah, lots of outlier stuff. And when outlier stuff is confirmed, then I'm good to go. Just keep partying.
Yeah.
We're running this overnight high,
Looks
Chris.
like we're coming into that. Take me out.
Whoop, whoop. Yeah, 845. Is that what you're waiting for? Yep.
I have it a little bit before that at 841.
Oh, it's coming, bud. The bid is pissed. Finally. I was trying to look at these. Yeah, these candle highs are very good today, too.
See if it can take me out.
Yeah, it's kind of a big guy. Big guy showing up here on the offer, flashing 100 lots at 833. Let's see if he gets filled. 835. I like to see this stuff at the highs. Just advertising for higher. Giving the bid something to do.
Yeah, everything looks good.
I do have 80 points on this. I should probably take this off.
Yeah, what, one left?
Yep, we're good. Yep. Good enough for me. I got an hour to get back in if I need to. If this is gonna,
I want to close some here as well. I'll do that.
Turn into a proper trend day.
All right, I took a quarter off at 2 point, I don't know, 1 hour, 1 hour maybe.
Yeah, 680. So you're in from 680. I got to try to go back and see what you were up to.
Yeah. Well, we came and tested
beautiful retest.
Yeah, that was a back test of that overnight consolidation.
Mm-hmm.
Triggered my entry rule, so I took long.
Look at this. Look at this. Look at this buyer that came in with you right here.
Where? What are you looking at?
That's your 680 spot. Yeah. So somebody lifted a bajillion offers right here at 585, or at 585 at 680. That was your entry. That was your retest after it was done breaking down.
So when you're looking at that,
mm-hmm.
And you get that after that big push, you got to pull back into there. Are you looking at that and you're saying, okay, if we pull back to that area, I'm looking to buy?
Yep, I did too. I added right here once I saw this dude come in. So yep,
We're seeing.
added here. I was buying into it because the bid was crossing into it. Bid. So I bought quite a bit here. These are micros, so I was getting in and out pretty quick. And then I sold at VWAP. We came back, and then so two things were happening here. I had this order flow guy to lean on. We were retesting the -1. The curve of the VWAP band had flattened out, so we're not sloping up anymore. This was a pretty good low down here. I was looking to get long into this, like off of this London 30-second opening range as well.
Yeah.
So yeah, just trying to build this position and hold it down here. And then I trimmed up quite a bit once we got in here, added back into VWAP. And then I was just kind of playing this 10-point range here, like long, trim for 10, long, trim for 10, long, trim for 10, going for this IB high break. But this was definitely decision point up here. I think Merritt was saying that too. Yeah, not bad.
It's a good area. I mean, I want to look at what you guys are looking at, and I want to develop that eye for it. But I feel like you guys have a really good insight into the internals. And I was talking to Merritt about this. You guys have a good eye entering at or near the low, while I'm still waiting for my entry rule to be met and then taking it, which is fine. But I see what you guys are doing, and I think, oh, I can have a little bit of a lower entry, allow me to have less risk, and in doing so, I can have larger size.
Yeah.
From a business perspective, we're in the business of generating, more revenue in the areas and locations that we identify. That's what attracts me to it, and it makes me want to have that additional layer of confirmation.
I think you'd be great at it because you're extremely disciplined in your system and where your orders are already going to, be placed. Like, you have such rigid qualifiers that you can add order flow to that and probably benefit by 5 points of an edge there. But the problem with order flow trading that is extremely common is you see people try to get into it, and then they're looking for order flow entries every place along the chart, not just necessarily at their key points of interest that, they've got setups at. So that's how people get lost in the sauce very quickly, because order flow is a lot of noise, throughout the day. If you go up and down this delta volume profile, which is all I think you'd really need, Chris. You just need just a quick delta volume profile.
Is that what that is? Is
that
what that's called?
Yeah. So this is how I identify where bid is stepping in and where offer is stepping in, and I use that with the DOM as well. So I use that to gauge aggression. But nice, all-time high, baby! Woo!
There we go.
Nice job, dude. But yeah, all I'm looking for, and the way I've figured out how to explain it that is simplest, and that's how I think about it too, is it's just kind of red team versus blue team. And this profile shows a bunch of some buying at the lows, and then no real selling stepping in to counter it up until we got to the 680 spot. And so this is, whenever you see a big blue number, it is a lot of people crossing the spread with market orders from the bid side to the offer side. So this is a lot of passive selling, how we refer to that. And when that passive selling is beaten, or when buyers are rewarded with higher prices beyond that passive seller, that's, a context clue that buyers are in control of this moment. And so if you're long, like we were from, 650 area, this is a good spot to add on a retest, because this is, is that still supportive? It's like support and resistance, but this is how you can use order flow to manage a trade towards a target. That's kind of, I think that's how I do it anyways.
Yeah, that's great.
And then we got up here and we were in this box, fighting. We were fighting to get out of the
I like
range
boxes.
or go by. No. You could draw one right here. This is a quick box. And this is like red team versus blue team. And when you see this red team on the bottom, blue team on the top, that's the decision point spot. You're not sure who's going to win until it leaves the box, right? You taught me that probably.
Yeah.
Yep. So then we left, which is great. We broke out of it, came back, tested it again, and then it was straight up from there. So
a higher low, and that's all you needed, a higher low to hold, and the reversal back up sort of confirmed, at least for me, like the reversal back up from that confirmed that it held, and you ride that.
Yep, that's correct. Let me see what this ES, where did I put this ES runner at?
Beautiful trade, beautiful trading.
Thanks, dude. Yeah, you too. We're always on the same side of the market, the good guy side.
It's our job to participate in trends,
Yes.
It's a career. It's a business.
Yep. It's a business. These are expenses. Has Pax been calling you and telling you to call it a business?
No, he tells you that?
Of course, yeah. That's one of Pax's many things he says all the time. This is a business. These aren't wins and losses. These are expenses.
Yeah, the way I see it is, and talking to a lot of traders is, if we're a business and we're a seasonal business and we do really well in the summer, well, we should allocate more expenses in the summer to achieve higher revenues.
Oh, yeah. Yep.
We should do that in the charts, find those locations where our revenues are the highest with very minimal risk, and execute. Right? That's why Merritt says this. You guys are also focused on all of location. I think all of us focus on location. Location is so important. And the better we can be at defining and identifying those areas, you with your tools, other people with our tools, we can consistently create a positive expectancy.
Yep, absolutely, man. And that's all you need. That's all you need to win. A positive expectancy and the will to keep trying in the face of losses. You also need perseverance. However, you have to find that. You could be like, if you're too dumb to quit, that works too. That's my strategy. Be too dumb to quit, and you're good to go.
Yeah, you just have to. You just have to want it.
Yep, that's true. You gotta want it.
The pain of what you're, the way I see it is the pain of what you've gone through or your life currently where it's at or where it's been has to be greater than the pain of the losses you're going through.
Yep, I can see that too. That's a pretty good way to say it.
I mean, that's why I grew up, because, I had kidney failure and I had dialysis and I had a kidney transplant.
Yeah.
So that pain was nothing compared to taking some losses here as you're learning.
Yep, that's true. Yeah, I've always felt like, I don't know. I did so much dumb stuff, like just trying to get into music world. And then once I finally got there, I realized like, I've been through so much dumb stuff and so many setbacks. Like I kind of feel like I can't be killed. Worst case scenario, like I know I can survive. So having that ability to be like, yeah, I've overcome so many things and so many setbacks that like, this isn't going to, be catastrophic to me. I can take some losses and I'll always be able to bounce back. That self-confidence is really important.
Yeah. All right. I'll answer this question, then I'll get out of here. Because I saw it asked like 3 times. When do you consider an RSI divergence complete and ready to enter? The RSI divergence needs to be in the location where you're looking to have the change in trend, meaning where buyers are no longer in control. If we get a pullback and then sellers start to take place. For ES, that was the 6390s in the pre-market. For NQ, that was 600s, 580s. So if you're getting a pullback, like in the trade I took this morning, we had a complete downtrend. We had, if you watched the stream earlier, we had 2 lower lows, lower highs. On the second low, we had an RSI divergence here into that support area as we back tested the overnight consolidation in NQ. So we're pulling back into the breakout area. We have a completed 2-minute downtrend via my rules. And then we have RSI divergence. Sometimes you'll have delta divergence, and then sometimes you'll have an SMT, which Kane looks at, which is a divergence between ES and NQ when one makes a new low and then the other one doesn't. So you're stacking up these probabilities to be in your favor of where the reversal now has the highest probability or has the hedge to reverse back up. And that's where, so the RSI divergence doesn't really complete. It's just signaling to you that that new low doesn't have the same momentum as the last low, and that new push lower doesn't have the same number of sellers. And so then I look to engage. But that is it. I'll get out of here. See what other trade comes up here for you, Stove. You closed it, huh? We hit new highs and you closed it.
Yeah, I closed it before that. I closed it at like 8:30.
Okay, great trading as always. I'll keep
brother.
watching you. Chat. Goodbye. You have to take care. All right, Stove.
All right, thanks, Chris.
All right, take care. Bye, guys.
What a pro. Total pro. Always impressed by Chris. Yeah, everybody give it up for Chris. Hit that like button for Chris. Not for me. Not for Merritt. Hit it for Chris. How are we, chat? You guys have fun with Chris and Merritt? Was that cool? Short life hacks was really rooting for. That's funny. This is a lot of this chat. Short life hacks. Oh, he went down to the Aria. All right, cool. This guy had a cool morning. I'm just reading back through. That's nice. But yes. Good morning. Good morning. Good morning, chat. Hey, Omni. Good morning, brother. Dom, Stowe, please. What rotation value do you use? 60 points on my delta volume profile. I like 60. So what that means is, so we're in an up leg now, which is it's currently the entire, this is all of the delta from the low because we have not rotated 60 points down yet. So in order to get this delta volume profile reset, we have to rotate 60 points down. And that ain't happening, boys and girls. Not yet. Max, how are you setting the chart to keep candles on the left and profiles on the right without overlapping? I believe that is in the chart preferences. And it's also in the preferences of the profiles themselves. You can just give them like offset values so that they only come out of the screen so far. Yes, Cooper. The caveman drive. All right, let me catch up. Devin asks, can I please explain volume profile? Devin, what do you want to know about volume profile, bud? I'm happy to explain it. Do you mean delta volume profile? Hey, morning, Chad. Or at just volume profile itself? Yeah, let me know what you need, bud. I'll help you. Why do I reset the delta volume profile? Because I'm only trying to see the most recent leg of Delta. So I'm not concerned with the stuff that is there from the past. I'm trying to watch it from the leg that I'm in, because I'm only really trading leg to leg, or rotation to rotation, however you want to say that. I mean, we kind of use them. We use those terms the same. So we're selling off here. Nice, good surprise. Europe closing. Trend could be over. Ran the all-time high. Never know. What's our? We got 240 points in already. That's cool. I'm happy to get back in down here. We'll need to see some of this get retested. I also kind of use that Delta profile reset as a clue if the trend is truly ending. So if we do get a 60-point rotation down, that's going to be a sign for me that, that's kind of the biggest pullback I want to see out of this leg. So if we get that rotation, then I won't be looking for longs. I'll be looking for different kinds of setups. Hey, good morning, Mike. Good morning, just another day. Good morning. Good morning, Happy Crab. Good morning. Good morning. Hey, good morning, Mark. Good morning. Ooh. Possible single print. Chilling there. That's good. Yeah, sure, Devin. I use that just to see, where buyers and sellers are located, just to gauge. We can kind of look at it, what it's doing right now, as an immediate example if you want. All right, so coming back, retesting the overnight high, right? So we see this red number coming in. Now, the Delta volume profile is the sum of the ask minus the bid. So negative numbers are going to be bid dominance. Positive numbers are going to be offer or ask dominance. So what I want to see here in combination with the normal volume profile, so back into this node. This is also a single print that formed. You see that red number just pop in there once we got back into overnight high? We'll take a shot. So we want to see this bid be supportive. And what that would show us, if this stays supportive, is that this was selling, met with a passive buyer that was not rewarded with lower prices. So that's all I'm using the Delta volume profile for, is to judge, passive selling, active selling. And right now, we're in an uptrend. Let me get out one at least right there. 4 on. Okay. So right now we're in an uptrend for the day. Also for, I guess in general, we just ran the all-time high. So I'd consider that an uptrend on the higher time frame. So we're just looking for this bid to be supportive here. If it's not, then this is selling that was rewarded. But when I'm trying to buy a pullback, this is what I'm really looking for right here. I'm not super into this location. I just wanted to show that spot. Bid's kind of stepping in. We'll hold on to it. Why not? And then the other thing that's happening here at the top is, so this is passive selling right here. So what I want to see happen in an uptrend where I'm trying to be, on the side of, let's see, where's that? 445. I'll just hit that. I'm trying to stay on the side of the trend. I want passive selling to not be rewarded with lower prices. So ideally what we looked at there for that pullback and that trade I just took is red number, red team. We want them to be rewarded. We want blue team, the seller team, to not be rewarded. So that combination will get us higher prices. Yeah, Mike, I'm in a buy. It says no position because this is set to NQ and I've got this on micros. So, but you can see if you look at the at this. This is a 2-sell stop here, and I took 2 off already. So it was a 4-lot position. Now I have 2 lots that are 12 points in profit, give or take. And then these are my other sells here on the other half of that bracket. Yeah, no problem, Mr. Deck. No problem at all. Sir VWAP has a question. Stowe, I'm curious what made you pivot to FT. Oh, full time. Yes, I had a bunch of money saved up, luckily. So that was part of it. That allowed me to do it. I had about a year's worth of expenses saved. Without that buffer, I would have been extremely nervous. I just lost my job, so I had to pivot. There was no other way around that. I did not have a choice. Had I not done that, I would have been part-time trading for at least another year. That was my plan anyway. But you know, plans, they don't always work. Oh, no problem. Yeah, I thought you meant like I thought you meant footprint for a second. I was like, yeah, but it's fine. No worries. That was about, that was probably about a year. It was maybe like a year ago, a little less when that process started. And then I really went full time. No, 2 years. I'm sorry. So that was 2 years ago. Then I went full time about a year and a half ago. How'd I get hooked up with the OFL team? I was just hanging around. I just bugged Leo enough. And he was like, this kid won't stop talking to me. Yeah, that's how I got in with it. Everybody, you know, just hang around. A lot of people ask me that at the event too. It's just like, how'd you get involved in this? How do you do this? It's just like, just hang around and be cool for long enough. And eventually your path will present itself. That's how I've kind of walked through life anyway. I don't know if that's stupid or smart, but that's what I've always done. Hey, good morning, DZ. Good morning, brother. That's honestly it, XY. Also, hey, brother. Good morning. Just, yeah, my grandfather would always say, just act like you've been somewhere. Act like you've been somewhere before. That's all you got to do. And be nice. Well, I mean, it starts with your mom, JS, and then add one person a day. You got to build it incrementally. It's like building a house of friendship, you know, one brick at a time. Nice little range today. Beautiful trading day. Yeah, I still like this up here. I mean, pulled back to the overnight high. Still going. And now we've got, you know, a different battle up here. This is a passive seller up here. Easy to see on the DOM. Easy to see in a delta volume profile. You don't have to stare at a DOM if you don't want to. I don't recommend it because it can drive you crazy. But yeah, so obviously we're fighting with this. That's pretty fun. Put the point of control all the way up here on a 250 point range. That's nice. That's encouraging. Well, good luck with that, JS. My wife doesn't think I'm cool. But I mean, she gets to see like the most uncool version of me. So My wife's the cool one. It's pretty good. I mean, we've got ES made a new high just then by a tick or two. Move this dumb thing. A lot of this trend stuff, yeah, a lot of news days tend to be like this, where you get. Let's go back and look at the news candle itself too, because that is a thing I stole from Mr. Brent Donnelly. I don't know if he invented it, but he was certainly smart enough to explain it in a book. Yeah. So this is what I was kind of looking for at the low. I like to look at the highs and lows of, large news event candles. And so today that is, right around the 660 spot up until 756. And then, it's going to do whatever it's going to do post that. But like, this is the large volume. And for me, it's easiest to spot on a volume related candlestick. So not a minute. I don't have like minute qualifiers in order to explain this range to anybody. I like to use the order flow tools and also use the volume candlestick just so I can see it. So this happens to be like the first 20 seconds of that candle were the majority of this volume. And I've got these set to 750. So it's normally about 3 candles worth of volume is what I'm looking for. And then if we get into the day, let's see, we got 755. That ends up becoming this ledge here. And then we ultimately pulled back to, 660 spot. And that's where I really started to try to get in. They did get me, stopped out here. But once we ran that 30-second overnight low, then I'm back in. Trying to be long, trim some off, got more long. I was really averaging into that spot down there. Also why I was using micros. If we're gonna get a big enough day range wise, then I can accomplish plenty with four to 5 micros at a time, flowing in and out. Commission's gonna suck a little more, but I'd rather be under leveraged. Also, I think Trump said something weird back here that made the whole thing reverse anyways, right? Did he say like it was going to be, it's fine to sue Powell or something? Is that this candle? I assume. Yes, I'm East Coast. Sorry. Jim, you answering my questions for me? Don't tell him where I'm at, Jim. Yes, I'm East Coast. The best time zone. As confirmed by Anthony yesterday, by the way. All the cool guys are Eastern Standard Time. Every one of them. That's also true. Yeah, just cruise around find the cheapest bar at any East Coast casino, and you might be able to run into me. I mean, ES kind of rejecting this, but yeah, this is just trend up until proven otherwise for me. It's probably going to be a pretty grindy rest of the day if this trend continues. This is normally what happens post the CPI, but I'm going to stay long. I don't think we have anything else today. 2:00 federal budget balance. And then something at 4:30 called API Weekly Statistical Bulletin. Okay. That sounds important. I'm going to take this off. Hey, Zeus, great question. How do I determine when the trend has stopped? So That's where I use these VWAP bands. I'll walk through how I use them. So VWAP bands and MGI, that's how I determine if we're in a trend, what's happening, and good spots to re-enter, right? In concert with the delta volume profile. So right now, zoom all the way out. All right. You folks see this band on the top and the band on the bottom. And then the green and red line is the VWAP itself, right? So these bands are based on the regular trading hours session, RTH. The way that I use these is you give it about 30 minutes. Let enough price develop for the VWAP to exist, right? So I don't really recommend using it for a gauge until 10 o'clock Eastern time, because you need it's the same way I don't look at a weekly VWAP band until like Wednesday, because it needs info. It's not really doing anything much until it's had some time. So you give it like 30 minutes, start looking at it at 10 o'clock, right? So we're down here, 10 o'clock, and the bottom band is slanted down, right? So this is pretty tricky down here, but this was also our buy spot that we were eyeing up from pre-market as part of the stuff that I was looking at. Once we get back above the -1, the band goes from an angle to flat right here. I'll zoom in so this can be a little more educational. So this baby flattens out. That's great. So flat is neutral, slanted down, bearish, slanted up, bullish, right? Nice and flat. VWAP itself flattens out, and the top band flattens out too. So this is good. This becomes a more neutral price action. In neutral price action, price is going to tend to revert to the mean. And at that point, the point of control was up here, I think, at 750. So I'm confident in adding to this long here with stops down here, which you see they got me a couple times, but you got to be able to get back in to traverse the value area, which I would consider to be up here on the other side of the VWAP band at the +1. So the story of the day continues. We get up here and it becomes a bit of a fight. Everybody's arguing with each other. Blue team is arguing that price is too high. Red team is arguing the price is too low. Eventually, one of those people is going to win that argument. And it happened to be the red team, which is great. It's my favorite team. If I had to play for a team in real life, it would be the red team. That's because I would rather be long. And then once red team wins that, this gets retested down here and then continues higher. All of this passive selling is not rewarded with lower prices. And we get into this upper VWAP band, and you can see the slope begins to climb. Now we're in an uptrend. What's going to happen throughout the day, as price action slows down, is this will eventually widen and flatten out a little bit. But as long as we are up here in this band and, bullish things are holding, like the overnight high held from the upside on a retest, we're above the IB high. We're above the, all these spots that were previous resistance. We're above this seller here that was initially, extremely mad, all those things. And we now have a confirmed single print here. These are all bullish things for me. So the trend remains intact intraday until this stuff breaks down. If it breaks down, then you're just not in that trend anymore. So it's going to be tough for you to look for continuation to the upside outside of until we're back above overnight high, above IB high, that sort of thing. So that's how I use that. Yeah, Mike, those are VWAP standard deviations, yes. Yeah, you can let the IB print too. That's fine. That's good, XY. Exactly. No problem, brother. Anytime. That's what I'm standing here for. Answer your questions. Drinking bubble water. That's the gig. You're welcome, DZ. You're welcome. You're welcome. You guys making XY work too. Good. Good. Keep them working. Yeah, just chilling up here now. Price happiness, my friend Jim likes to say. Yeah, what are you doing, XY? You clocked in already? You got to work later, bro. Nah, Sandy, it's only Tuesday. I think it's Tuesday. So just bubble water. I got my polar back. This is number one for me. It's one of the cheaper ones, but it is my favorite. Could be nostalgia, I don't know. But that's my primary bubble water. Polar. Blue polar. That's why it's cracking me up early. Oh yeah, that's right. XY's on tomorrow in this time slot. London close. 8 to 9 a.m. Brutal, bro. Yeah, Joe. I've got I color the distance between the 1 and 2. So this is +1, +2, and then -1, -2. I like to see those bands because I've created rules around, what trades I'm allowed to take inside of those, what trades I'm allowed to take outside of those. So if I keep them shaded, it allows me to, follow those rules a little better. Yeah, sure. No problem, Joe. And that's RTH too. No, fat fish. It's 11 to noon. XY's on 11 to noon tomorrow, Eastern time. Can we anticipate a 60-point correction from all-time high? If so, how will order flow help identify that 60-point drop? No, you cannot. You cannot expect anything to happen before it happens, especially down to how many points it will be.
That comment's got PAX written all over it.
The only thing you can expect, hold on, I'll try to do PAX. The only thing you can expect to happen is everything that you expect not to happen. That's the stuff that will definitely happen. But no, if it happens, then it happens. But you don't know if it's going to be 60 points, if it's going to be 6,000 points. Who knows? Like, you never know until it goes down. So the only thing you can do is, trade your plan. That's it. And for me, my plan is to stay on this trend until it's over. Probably make a sandwich. Hopefully make a sandwich after the trend's over and I'm out, so I'm not missing opportunities while I'm, making a sandwich. But that's my plan anyway.
So, Stowe, I just wanted to talk about your discussion on the slope of your bands.
Yeah.
Was so important and so good. It's easy just to kind of ignore that because you're looking at all this other stuff, order flow and where you're placing your trades, and maybe you have some, other indicators on your charts. But the slope, and I don't care what kind of bands you have, those slopes are really important.
Yep, absolutely. And it seriously is why I have them. I catch a lot of grief for the ridiculousness of the colors of my chart, but that's why I shade those babies. So I know that if I'm doing stuff I'm not supposed to be doing inside of those, then I'm breaking rules. So
Yeah, No, that's awesome, man. I appreciated it.
Yeah, no problem. Risk crafted returns. That's a good one.
Mielo, Michael, good to see you, man. Thanks for being here today. Always a
Yeah, I kind of
pleasure.
just I went over the slopes, and how just yeah. When this stream's over, just go watch it because I just did. But yeah, I just went through the whole day and how the slope changed. It is a good example of, you got to pivot. I don't know, 3 times sometimes in the morning before the actual trend shows itself. So yeah, just go watch it again.
So, Michael, a lot of the nuances of the data that Stowe is showing with the histogram bars and the profiles and stuff is unique to order flow labs. Part of the secret sauce.
Yeah, you can also look at it on a footprint chart. There's other ways to see it for sure. It's literally just the ask minus the bid in a 9-tick compression.
Yeah.
The ability to look at it in this way with it resetting every 60 points, that's definitely unique to order flow labs. But the beautiful part of trading futures is we get to see all the orders, and that's what I'm using. So anybody with data can see the ask minus the bid in different ways.
Yeah, I mean, like Stowe said, you could see it natively on Ninja, but it's going to be in each candle column. It's on the candle itself, so it's a little wonky to see.
Yep.
So, in any event, super awesome, man. All right, well,
That was
listen,
a cool
Stowe,
morning, huh?
What's that?
That was a cool morning. I'm happy with that.
It was a great morning for sure. A lot of great intel, a lot of great trading, a lot of great back and forth with Merritt and Chris, and then you is popping in there as well. That was really good.
Sweet. Awesome.
Yep. So this afternoon, folks, who's coming back? We got right now. I see Nick and XYZ. Is that still the thing?
Yep, that's correct.
All
I
right.
traded off.
Very, very awesome. All right, man. Stowe, check your mailbox later on today.
Oh yeah, that's right. I got a prize.
You got a prize, baby. So
Awesome. Thank you, buddy. I totally forgot about that. Oh, that makes my day all over again.
Hopefully. I don't know. Don't get too excited.
All right, cool. I'll tone it down.
All right, man. Thanks. I'm gonna do an edge report, and we're gonna end the morning. Thank you for everything, man. Appreciate it.
Sounds good, brother. Bye, chat. See you later.
And let's hit that thumbs up for this man. Come on, he's working hard. Thumbs up, subscription button. There you go. Mission Control. Love that. Appreciate everybody being here today. We're going to call an audible really quickly here on the Edge report because Tracy pinged me and is like, hey, you got to look at the U.S. dollar. And so we're going to do that in the form of the Euro FX right now. Apparently, our good friend AJ Antoni, I'm going to say his last name is Antoni. I'm not sure if that's Italian or not. It possibly could be. Possibly the next BLS chief suggested that maybe we suspend the jobs report until we get it fixed. In any event, whatever he said, things are moving with respect to the U.S. dollar. And you can see on my market analyzer, everything, there's a lot of green, right? These are the currency pairs. Remember, the U.S. dollars in the denominator and the futures across the board. So that's why it looks like this. Euro FX today, we had this benchmark candle, this key candle at 8:30 to 4. This is, boom. This is when the news hits the street, right? It sets the pace for the day. Benchmark candles often do that. However, we had this big sell-off that took out the midpoint almost. Yeah, I guess it took out the midpoint of this. So it was a little sus. But then boom, on the open, we resumed that rally big time, and then we broke out of the initial balance high. So we kind of, we took out that one-day max, that Menthor Q one-day max at 1.1695. We took out the high vol level at 1.170. We're having a little bit of a retracement right now. But we do have another target on the upside should this retracement kind of slow its roll and we pick up some more steam, and that's R2 at 1.1740. So dollar weak, euro strong. Don't see really any, not a lot of divergence with my oscillator down here. It's the commodity channel index now. I changed it. So I'll be keeping an eye on that going forward as well. And I do have a 10-minute, I'm back to my 10-minute charts as well. get a better feel on the 10-minute charts. Daily, though, Euro FX, just take a peek. You can see we're breaking out 1, 2, 3, 4-day consolidate, nice resistance. Get it out, Jim. 1.16935. And we're popping up against that. And this is not the only market that's breaking out. Let's look at let's go to Dr. Copper here. I know we got that really crazy looking candle, but let's ignore that for a second and look for the last 7-8 days of trading. And now we're kind of moving on up here. We got to get through these May lows first. Nice, seriously large green candle today in Dr. Copper for whatever reason. We'll ask Tracy at Hot Commodities later today, but there's no wick at the top of this candle on copper. And you look at an intraday chart, we're well above that session VWAP. We're well above the old volume node as well as the point of control, which was established a long time ago, right? We haven't traded down here at this point of control ever since 8:10 this morning. So it was a long time ago, but we kept going. We kept going. Even we have an initial balance breakout to the upside here, and no end in sight. Next target up, R3, pretty close to call resistance, 4.57. So we'll find out what the reasons are for this, but it is one of the many markets that are actually breaking out today. And we already talked about the NASDAQ often, so we're not going to cover that right now. So having said all that, folks, thank you everybody for being here at NinjaTrader Live. We greatly appreciate you being here today. Hit that thumbs up button for all of our guests and all of our special guests and the live traders working hard, putting it out on the line for us. Greatly appreciate those guys. And we appreciate everybody in the chat. Thank you for being here. Chat was awesome today as usual. Give yourself a thumbs up. I think that would be a good idea right there. In any event, we will be back at 2:30 East Coast time. Me and Shai had Commodity Report, and then we'll be with Nick for a tick and XYZ trading the close. Until then, relax, have a nice lunch. See you soon.